Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everybody. Welcome back to another live stream. Hope you're doing well and hope you are staying safe in these markets. Gold's up today. Stocks are up today. And I have to say, I'm a little confused as to why. Oil's down 1%. Somebody tell me if you've got the reason, if there's some headline that I'm missing. But it does seem like the Strait of Hormuz stuff coming back into full swing. US, Iran stuff definitely does not seem to be over. Was there some announcement, some thing that was said by the president perhaps that turned things around in terms of the concerns? I'm not exactly sure. I was just looking at it this morning. I'm like, okay, I can't see a headline. I mean, the latest that I was seeing was the U.S. striking Iranian nuclear plants, also claiming Trump. Well, I guess maybe this is the piece in here that Trump is still claiming that Tehran wants a deal. People are taking that as a open extension from the White House for negotiations, but we'll see. Anyways, gold is higher. Trump tacoed, sort of. Yeah, the deal part. Okay, yeah. I mean, that, man, I think, you know what I think it is? Here's what I actually think it is. I think that there is such a pattern here that has emerged. Like, it's such a incredible amount of time that this has happened where you get some concerning news and everyone freaks out, and then it gets walked back, you know, within like 48 hours. Now, markets are really smart. People think that trading is difficult because trading psychology is hard. That's part of it, sure. That is a hard part of trading, but what is infinitely more hard, in my opinion, is that actually beating market expectations, which is what you have to do in order to make money. Because if something is priced here and you are buying or shorting, you are trying to guess, trying to predict where you think it's going to go better than what other people are going to be able to do, right? That's what you're doing when you're trading. And that's hard to do because there's a lot of really professional money that's in the crowd with you. So you're trying to beat the house essentially whenever you trade. That's why it's really difficult. It's not because trading psychology is hard, because trading strategies are oftentimes not as good as people think that they are. And that's really, really difficult. So anyways, I could rant on that for a while. But the reason I got into that topic in the first place is that the market has gotten very used to this. The market is smart. It figures stuff out pretty quickly. And so what the market may be doing here is front running the taco, right? So again, the acronym, Trump always chickens out, that acronym that has floated around in finance bro land for a while, is the idea that you get something big, something scary, some big threat from the White House. We're going to do this. This is our next move. The big stick method, the Ronald Reagan concept. But then it gets walked back as soon as things, get too real, right? And that has happened so persistently with this whole Iran and tariff stuff in the last year and a half that the market, in my view, is probably smartening up to it. People know that is such a consistent pattern that you get these types of moves, these V moves, that I think that you're probably seeing front running of the taco idea. That's my opinion. Now I have said this. I said this yesterday, and I'll say it again. The taco works until it doesn't. Okay, because if there is a possibility that at some point the administration truly decides to follow through and is like, nope, we're not going to wait around for a response. They aren't willing to negotiate. It's over. It's done with. The thing that I would say about this is, if you're watching gold, if you're watching dollar, if you're watching everything, this is why the VIX has been contained, is because it's been a really reliable pattern. You get the VIX spiking, right? Oh my gosh, stuff's about to get real, and then the taco, right? Okay. And I personally don't love that acronym. It's not that I'm pro or anti-Trump. I just think that it's a little bit disrespectful to say. So let's just stick with negotiation if you like him, taco if you don't like him. There, everybody's happy. The point is, it happens so consistently that the market has probably smartened up to it. And so it's priced for a sudden reversal of sentiment very quickly. So when that happens over and over and over, what the market does is it starts getting smart to it. So if it changes again, if the puck moves, right, suddenly I think that could get really, really volatile. So volatility has been contained. If you're watching the S&P 500, the Nasdaq, gold, moves have been sort of kept contained because of this expectation that the administration would do so. But if they take that ceiling off and they raise the roof, right, they don't back down from something, volatility could get really, really aggressive. And I am concerned about that because of how much everybody just full-fledged expects every single headline to get faded back. So that's my take on it. Again, I'm not trying to make the call like, oh yeah, no, they're gonna full force ground invasion. I don't think that's very likely. But could there be further escalations, stronger sanctions, aggression towards allies of Iran? Could there be Iran closing the two straits that they're threatening to do? Yeah, it could happen. And so I think that, you've seen this story play out so many times. At some point, I wonder, does the administration get tired of having to say back and forth headlines that they just commit to, yeah, no, we're going to take the Strait of Hormuz by force? So anyways, Nick, you are losing money trading. I know, common sense. Don't make me do it, man. Don't make me pull up my broker statements, because I will do it. I do this because I think that it is, if you're going to be watching anyone and spending a lot of time watching people do stuff, I think that statements are cool. So here is my P&L so far this year. To be honest, I wish I was up more this year. I'm up 15%. Let me take that back. I feel really good with where I am this year. What I say about, there was a couple instances in which I was this close to having a very different year. This has been a really good year for me. 15%, 7 months into the year for me is like, I'm really happy with that. I'm working on a large capital basis. I am not worried about making 100% per year, because with that runs the risk of blowing everything up. I'm not interested in doing that, but I do make money trading. However, the last few months have been a little bit frustrating because of a specific thing that happened. There were a couple trades that I was so irritated. Like, I've been doing this for a long time. Markets are rage bait and a half all the time. Doesn't matter how long you've been doing this. I missed getting into CIBR in the pullback narrowly. I still have, just to really rub it into myself, cybersecurity is an area that, if you've watched me for a while, I really like cybersecurity as an investment class, like as a group of stocks, right? So I missed this buy the dip opportunity so narrowly. And it haunts me, right? Because I'm like, dude, had I caught that move, I had anticipation to put on some size and let it sit in the account for a while, right? That was going to be a position trade. And it probably was the difference of like a 10% mover in my whole account, right? You don't have to prove anything. The proof is in the pudding. Hey, you know what? I appreciate that comment, but I do have something to prove. And I think every creator that you watch who talks about trading, who talks about investing, they don't have to show proof. It's their choice to do so. But real traders can show proof. So I will always show my track record, show my statements, etc. I'm not here promising the world. I'm not the world's greatest trader. I mess things up. This, quite frankly, it pissed me off because I was like, dude, the best, look at that rally, right? And I've been doing this for a long time, but I'm still not perfect, right? Trading is hard. Trading is really difficult. Predicting markets very difficult. Don't show us statements because you could fake that. All right, man. All right, cheers. Anyways, I can fake my statements on a live Webull regulated brokerage statement in front of your eyes while we're live streaming. Is this fake? I'm down $4,600 today. Is that fake? You let me know. Also, I've been showing that. I've been thinking about this. I thought about this the other day. I was like, people could claim, hey, your statements are AI generated. But I kind of have a unique stance where I've been posting my statements since 2020 before AI was a thing for the regular person. So you can go vet that it's still the same account, all the same stuff. Anyways, it doesn't really, at the end of the day, I show it for the people who watch my content, who, want to know that they're not wasting their time watching someone who is not profitable trading. I am profitable in trading. I've worked my absolute butt off to do this, but it's still not easy. My point is, a couple things, this year that could have gone very differently would have really changed my P&L for the year. Like I would be having a 25+% year so far had I caught that move in cyber. There were several stocks that I wanted to get in on. And so I'm telling you this because I think it's important to talk about the missteps as well as the good things going on in trading. Now let's get to gold because I know a lot of people are interested in this. We did get a rally back in gold, so I don't believe, let me check my system so far. Thank you guys. Don't worry. I'm not bothered. I've done this for a very long time. I've had numerous lovely commenters over time. I'm more so answering the question for the people who are here looking to learn. I do show my statements not to be some arrogant jerk because I don't believe that I'm the greatest trader of all time by any means. I make mistakes. I show it so that if you're watching my content, you can actually commit to spending some time listening and know that you're not wasting it watching somebody who is not profitable. Gold is still a neutral reading for me overall. It has actually flipped more to just a complete neutral score. Fundamentals wise, market data here, jobs data. Next week we have CPI. So this is definitely on watch for me because if CPI, let me map out a scenario in which case I actually could potentially get bullish on gold or could go back to being bearish. I'm neutral, so I'm waiting patiently for something to materialize in the economic data. If CPI comes in lower than expected next week, then this could flip to bullish. Let's just throw out the idea that CPI comes in lower than expected, and that softens the story of rate hikes, right? We also have no idea what's going to happen in the Middle East between now and next week, right? Things could get crazy over the weekend. Hopefully they do not, but if they do, that's not good for gold either. Gold does not like the prospect of higher interest rates. So we also have PCE numbers coming out. So if this is, if we get some soft prints in CPI and PCE and PPI, those are things that could really dramatically change the story for gold. The economic growth data has been coming in a little bit softer than expected. It's not in bad territory. Somebody pointed out, they said, Nick, you're saying PMI is weak, but it's still above 50. And that's fair. But I mostly look at surprise factor stuff. So if the market is expecting a certain number and it comes in soft, that is the signal that I care about most. as an active trader, I am looking at metrics that are coming out, economic metrics that are coming out, and how they are faring versus expectations of Wall Street kind of analysts. So if we are getting softer CPI prints, softer PMIs, consumer confidence was lower than anticipated, if retail sales softens up, there's a story that could start to take place where the dollar softens and gold breaks out. What I'm looking for predominantly would be a break of this 4,200 level in combination with softer CPI. Now, I'm telling you right now that I'm not bullish on gold. I'm also not like willing to place fresh shorts on gold either. So let's also acknowledge what could take place that would get us more bearish. I am in watch mode right now for gold because I think we have some signals that could tentatively flip us into a bullish stance on gold within Edgefinder, but I'm also open-minded to it going in either direction here. I just want to be ready to adapt and join the trade in the right direction once it starts moving. So fundamentals, if we see CPI hot and PPI hot, right? If these things firm up the story of rate hikes this year, then I'm in the camp of thinking higher rates, dollar strong again, gold lower. So I'm telling you right now that I'm open-minded to that scenario. Like rates, let's see what rates are doing today. Rates are flat today, but they've been back on the rise. I'm not ignoring this because this is telling me that the bond market is generally in an uptrend in terms of its expectations of rates staying higher for longer. So I am very much keeping a close eye on what's going on in the bond market. The dollar index, I have no open positions in the dollar, but I am very curious to see how some of the CPI prints next week start to impact this one. Actually, look at this. Dollar index improved in score here. What's going on with dollar? Crowd sentiment. Let's look at some options flow really quick. I'm just curious what this morning's data came in at. The options data updates every morning for the day prior within Edgefinder. Okay, so this is S&P. We'll come back to indices in just a minute. Let's take a look at dollar really quick. Whoa. That's crazy. Crowd sentiment just went really bearish on gold. I'm sorry, on the dollar. Look at this, guys. That instantly makes me want to fade that. However, I want to take a full picture of what's going on with the dollar. So what this is showing you, this is net options volume flow. It takes a look at put and call options. Specifically what it does is it takes the volume of calls on the day minus the options or the volume of puts on the day. And it takes a moving average, a 5 and 20-day moving average of those things to make a sort of smoothened chart. Okay, so this is one of my favorite new indicators that we just added to Edgefinder. But you can look at this, and this is really interesting. This is really interesting to see this kind of taking place where the dollar went from everyone kind of crowding the bull case story. I mean, myself included, I was in there. I did make some decent money on the dollar, but then it turned down, and it turned down hard. Now sentiment seems like it has flipped to the other direction, and just in time for this Iran stuff to take place once more. I have to say, like, when I look at the dollar here, I do want to be long the dollar, especially if we get up and over the 102 level. Kate, goodbye, my friend. I wish you the best. I hope you find what you're looking for. We're gonna keep the chat moving here. He's distracting all of us, not just the people in the chat. Let's let him be his thing. Let him do his thing. He's on his own journey. We wish him the best. So anyways, the dollar index, where I'm at with this, +4 on Edgefinder. Fundamentals slightly positive. COT data was actually good for the dollar. So actually, let me say this. I think I'm more bullish the dollar than I am bearish on gold right now. COT data. Thanks for that, Nick. No worries. No worries. We're here to learn. We're here to improve. No need for negativity. US dollar, COT data, latest change was bullish. At the same time, institutions are still really long the dollar. We've been touching on this in the videos here recently. COT data. What do I want to look at? COT data history. Let's look at the dollar COT data history. Look at this. So US dollar selected. We've seen two things I want to point out. First of all, open interest in the dollar has expanded. Not a lot of people, if you do have EdgeFinder, I want to show you something. If you look at the COT data history chart, this chart has something very unique to it. It has your long percentage versus short percentage. It also has this yellow line, which represents long exposure kind of over time. But there's something also that you can look at. Look at the absolute height of these bars, okay? Notice how if we were to just draw a white line, right, across these bars, okay? Notice something that has recently been happening. Do you see this? Does anyone know here, for my COT fanatics, I know there's a lot of people who really like to track smart money, COT data. What does the white line going up mean? Does anybody know? Any ideas? It's a very niche, nuanced way to read this chart, but it actually carries a lot of significance. Anyone know? I mean, while we're more positioned open, boom, Aaron's got it. And perfect name for this, Aaron Retail Hedge Fund. Love the name, love the efforts. We're pro retail traders here. Retail traders starting hedge funds. It's kind of an oxymoron, but I love it. Anyways, net positions. Yes. Open interest, higher volume. Yes. You may have heard in the past, like watching a stock move, volume is really big in like the stock market because it's one exchange. People can track volume really well. People like to talk about like charts moving up on higher volume or charts selling off on higher volume. We can kind of do something like that with the commitment of traders data by using open interest. Open interest is a powerful indicator, and this is making me want to build more COT tools for our EdgeFinder users around open interest, because while this chart does show it, there's a very nuanced way of looking at it to get the open interest. So maybe we'll do something there. Anyways, this sharp rise in the size of these bars over the last several weeks tells me that open interest in the dollar has expanded, while simultaneously institutions have been building a stronger conviction on the long side of the dollar. That's the way to read that. We have rising bullish conviction on larger open positions. Does that make sense? If that checks, I hope I explained that well, because this is open interest can be a little bit confusing. Reading the commitment of traders data can be a little confusing, especially if you're new to this stuff. Give me a 1 in the chat if that checks out. If that makes sense, if we can move on, let me know. But that makes me very interested in watching, because that tells me that there's a potential powder keg here with this 102 level. Okay. We have stalked this level on the channel for months and months and months. This idea of like, hey, 102 on the DXY, watch it. 102, 102. We came up, we didn't quite hit 102. We were pretty close. And then we backed down off of it. Okay. What we're getting at here is this concept of 102 being significant. Institutions are building positioning in the dollar in terms of an accumulation phase. Could we potentially be rounding out for a significant breakout in the DXY? Content of this channel is gold, no pun intended. It takes a lot of effort to maintain credibility. Thank you very much. I appreciate you. Please explain again. Okay, I'll keep it really simple, right? within Edgefinder, we track commitment of traders data. These bars getting bigger tells you that more positions are being opened, right? Open interest. At the same time, the percentage of institutional longs is rising, specifically on the dollar. Now, if you have Edgefinder, you can track whatever you want in here. This is why you should buy our stuff, because we build really cool tools for traders. I'll tell you where you can get 40% off in just a second. That in combination with a price action chart that looks primed for a retest through these highs still keeps me thinking the dollar index may have more room to run. If we break 102, just for, I haven't even thought about it because 102 has been such a long-term target. The next spot is like 104.5. Like maybe you could get fancy in here, but the last time we had a significant kind of pivot was 104.5 right here. That's where we had the fresh, large sell-off. And obviously this turns me back to gold, and it says, well, if the dollar squares up for a breakout, that probably 8 times out of 10, or 7 times out of 10, I would say, causes gold to move lower. But the red bars says short positions. Yes, so there at any time, there is always long and short positions in terms of the aggregated commitment of traders data for any particular asset. What we care about is looking at the weighting of each side. Institutions are more heavily long the dollar than they are short the dollar as an aggregated group, according to the commitment of traders CFTC reported data. That's the way to read this. Are you still in UUP? No, I'm not. Nick, why are you not opening short positions in gold? Can you explain? Yes. So this is a very strong chart for me. Like this, I like seeing this. But if you watch my channel, then you know that I am a big fan of keeping an eye on 3 critical areas within my analysis. And I know if you've watched me all the time, you could probably recite this with me, because I repeat myself a lot in my videos. I'm very aware. It's on purpose. Repeating yourself in trading is actually a good thing. Technical analysis, fundamental analysis, and sentiment analysis. I look at all 3 of these categorically to help me attempt to take trades that work. We never know with certainty if something's going to work out. So what I like to do is stack probabilities as much as I can in my favor using these 3 areas. So why am I not short gold? Well, here's why. It's because this looks good for gold shorts, in my opinion. This does not look, it's flat. And sentiment is also kind of flat. Let's automate what we just talked about. Those 3 things, those 3 categories that I just discussed, are automatically monitored by the asset scorecard within Edgefinder. Technicals, sentiment, fundamentals. See how that works? Edgefinder is built around that philosophy of those 3 things factoring in to build a score report. So when I look at the gold summary here, I don't love the idea of gold shorts, partially because jobs market data, the non-farm payroll came in better than expected. And so these blues are kind of hurting the bear case, right? PMIs came in worse than expected. That's good for gold. Consumer confidence came in worse. That's good for gold, right? Remember, bad economic data, typically good for gold. Weakness in the economy, good for gold. People think, hey, I better get out of the US dollar. I better get out of US stocks. They're going to print a bunch of money to try and save the day. So weakening economic data is usually a positive signal for gold. And so right now I'm watching, because next week we have a big week, right? We have CPI. And so if CPI comes in hot and the inflation score gets very bearish, like CPI, let's say, just comes in hot, I probably will be looking to rally back into the short side of gold. But right now I'm keeping as athletic of a posture as a guy like me can. I'm not short gold. I'm not long gold. I'm kind of at the ready, right? I'm looking at gold. I'm like, okay, I need a little bit more conviction one way or the other before I can attempt another short position. The other reason I'm cautious to short gold still is we're 27% off the all-time highs. Typically, that is, historically speaking, a long-term, decently attractive entry point on the price of gold. Doesn't mean it can't go lower in the meantime. In fact, I think it could. But for me to short gold down 27% off the highs, I need conviction. I need a lot of stuff aligning on the short side before I can take the trade. And of course, maybe gold goes lower and maybe I miss out on something, but I'm not too worried about that. I'm worried about taking the trades that I know I'm supposed to take because I want to be here for the long term. I don't want to chase my gut instinct. Oh, I think gold's going to go lower, because a lot of times my gut instinct is dead wrong. And that's why I've systematized, mechanicamized, it's not a word, my way of approaching trading gold, trading anything. I want to have some kind of mechanical, systematic scorecard system to help me to rate concepts or ideas. So I am open-minded with gold. I'm open-minded with stocks. I'm open-minded with the dollar. The closest thing to a potential entry actually looks like DXY. If the dollar can rally stronger, get a little bit of momentum picked up here, we could very well be seeing fresh highs in the dollar. And yes, I can be long dollar without being short gold, right? I could be looking at perhaps something like euro dollar. Do I want to fade the rally if we get one here? I could keep a close eye on that. And what I can do for that really quick, and then we're going to throw the show over to Mr. Miko Audu. He's up next. Going to be taking a look at some trading setups shortly. What I can do there is I can go over here and I can say, okay, do I have any dollar crosses that I like more than others? Right now, pound dollar getting almost a bullish reading, so that probably wouldn't be one. Kiwi dollar and euro dollar getting neutral. So while it takes patience here, I don't have any clear and obvious setups right now, but I have a lot of potential ones going into the next few days. So if things shape shift a little bit here in Edge Finder scoring, I could very well be taking some trades very soon. If I just go non-majors for just a second, CAD yen, some of the yen pairs actually look kind of interesting. Here's CAD yen. CAD yen potentially breaking out to the upside could be intriguing. Pound yen, let's take a look at, I haven't traded this in a minute. Look how clean this chart is. Like pound yen on a pullback, I really like that chart. So I'll keep an eye on it. By the way, guys, if you do not have Edge Finder, if you are interested in getting access to it, I mentioned this earlier, we are doing our 40% off summer sale right now. If you would like information about that discount, it is one time to pay for Edge Finder. You don't pay monthly. It's not a never-ending subscription. I think people have enough of those. I'm a big fan of paying once for something, paying it off, and then you get to use it. So if you are interested in getting access to Edge Finder, it's currently at its biggest discount price of the entire year. If you would like some information, a link has just been dropped in the live stream chat or in the description below this live stream. Click that link, connect with a member of our team. They can walk you through the product. They can give you some tutorial information. We have a free Edge Finder course that is available. We can set you up on a trial. We can set you up on a payment plan so that you don't miss the discount, et cetera, et cetera. If you have any interest in getting Edge Finder, if you have thought about it, now is your chance to do so at our lowest price of the year. So there's the information. Don't miss it. And with that said, like I said, all the links for that are in the description or in the live stream chat. Up next, we have Miko Audu taking over the stream for a little bit. He's going to be taking a look at some Forex charts as well as other markets. So if you're interested in more trade ideas and a little bit more heavy on the technical analysis side of things, Miko is your guy. He is well sought after in terms of our live stream, loves them. So stick around and you'll get some really interesting trade ideas and thoughts from him. Stay tuned just after this.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Okay, what's up people? Hope everyone is doing well. Glad to be back on the stream. As always, we can go through a bunch of different markets. If you have any particular requests or even timeframes, let me know in the chat. I'll be more than happy to take a look. I'll start with some markets which I'm currently trading and kind of where my focus is on kind of the major instruments. But at the moment, I am long Euro USD. Now, I've been very active Euro USD over the past maybe couple of weeks, but especially this week. I've been mainly focusing on buys. Now, Euro USD in terms of my kind of longer term outlook, I'm actually still pretty bearish on Euro. I still like the shorts quite a lot. We can take a look at the DXY momentarily, but I'm looking at a lot more downside for the dollar. And I'm, downside for Euro dollar, upside for dollar. And I'm looking more so 1.12 is kind of my longer term forecast. So there's still a lot of room for us to fall potentially. I mean, this trend looks very exhausted. We've had multiple attempts to try and go higher, and now we're starting to build some bearish structure. So I'm expecting more downside, but more intraday, intra-week. We're trading at support, price is a little bit stretched. There may be a bit of room for upside before we do continue lower. So I'm looking to see if I can take advantage of that on the more intraday timeframes. So I've been pretty active. The buys haven't really caught much success, to be honest, because I've been buying pretty much all week, but we haven't really seen that momentum. Had some small losses, small wins as well. But I did get this entry yesterday, which at the moment is looking okay. We've had some red flags with these wicks here, but we'll see if that does persist. I think if we can get a nice break of this counter trend line, then maybe we can actually see some real momentum step in and some real upside. So yeah, Euro USD, I do like the upside. And of course, looking at the DXY, I'm pretty much looking at the reverse of that. I'm looking at some downside for the dollar, because again, we've been super corrective. But again, long term, I am still looking at buys, but I am seeing if we can get one more leg to the downside, perhaps come and test some structure, some levels below us, and then maybe we see the buys kick in. We don't necessarily have to do that. We could, of course, just fly at any given moment. Or of course we could reverse. Nothing's guaranteed, of course. But I am looking to see if we can continue lower, especially because we've had multiple attempts of trying to see upside. But over the past couple of days, we've really struggled. You can see there's wicks on the 4-hour chart. Multiple attempts to rally, multiple attempts to try and break through structure on our left, but essentially has failed, at least so far. So I'm looking to see if we can roll back over, test support, maybe come a little bit lower, and then we see the buys kick in for the DXY, and of course the sells for Euro USD as well. In terms of some other pairs, other USD pairs, I can take a look at gold as well. I'll go through pound USD very quickly, and then we'll take a look at gold. Pound USD is a bit awkward. I'm not actually interested in trading pound USD because I think it's a bit of an awkward situation. Primarily because of where it's located. I don't want to be looking for buys because we are coming into some bearish territory. We got prior highs here. This is where we saw a lot of bearish momentum previously. Also a little bit tired with this bullish move as well. So I don't think this is the best place to be looking for buys, especially if you're looking for a trade that could last maybe a couple days. Intraday, that's different, but yeah, I do think we're a little bit stretched. So this is not really a place which I want to be buying, and it's too early for me to be looking for sells just yet. So it's kind of in that weird gray area where it's not great for buys, not great for sells. I would just be very patient. Now, again, if DXY is going to rally and it is going to achieve some of my longer term forecasts, then I would expect pound USD to do the opposite and see some downside, of course. But yeah, just looking at the intraday, intra-week price action, we are still forming higher highs and higher lows. Yes, it looks like we're starting to struggle at this zone, but I would like to see price start to do something like this before, I take some shorts. So pound USD, I'm kind of leaving alone. We'll see probably what happens by the start of next week, but at the moment I don't see much opportunity. So euro for me was just the clear winner in terms of opportunity, and hopefully we can see some upside there. In terms of gold's been interesting because coming to the week I was actually looking for some buys on gold, and it looks like potentially those buys could still come into play, but it's a deeper retracement which I first anticipated because we had this lovely bottom here. Well, I don't want to say bottoms in terms of, okay, I'm expecting price to completely reverse, but this is essentially a low price created, and as it has had at least of a pullback from. But you can see we've had this range, price consolidated there for a few days, and then we broke to the upside last week. So coming into this week, the thinking was, okay, it looks like price is exhausted lower. We're seeing some buyers step back in. The plan is to look for a pullback, hopefully retest some structure, and then maybe see some upside from that. We've pulled a little bit deeper. You can see this candle here, really aggressive candle on Wednesday, did close back within the zone, but it looks like we're seeing some strength coming back into the market. Now we're breaking back above. Now this could just be a deeper retracement than anticipated, or at least for myself anyway, and we might see the continuation. That is a awful looking arrow. Let's do that again. And then, yeah, we might see the continuation now potentially. I'm not really interested with the sells with gold. I do think the market has had quite a lot of fun to the downside. I'm not really interested taking any shorts anymore. It doesn't mean we can't still see some downside, but I do think the market is a little bit stretched. We're trading at major support. The idea with the most kind of with the biggest risk reward kind of opportunity would probably buys. So I'm interested in upside for gold. I'm not really interested to trade it myself because I kind of got a similar trade with Euro USD long. But if I was looking to trade gold, I would be looking for buys for at least a pushback to resistance. Now, if I do scale it a little bit lower, this area is a little bit awkward, so I wouldn't be buying just yet because similar to what we just spoke about with pound, this is kind of an area where sellers have been present before. We could see them jump back in, so not really a place which I want to be looking to buy into. But let's say price can break through this, well, that would be a really strong sign from the buyers, because now we're seeing areas where prior selling pressure came in is now failing to hold, and now buyers are showing a bit more dominance. So because of that, I would be looking at pullbacks afterwards, especially intraday, maybe like the 15-30 minute chart, and then some longs there, and that will hopefully take us back to resistance. So I'm leaning bullish on gold. Bigger pullback than anticipated, but if we can see price go and break structure now, I think that puts the likelihood of more upside pretty high at that point, and then afterwards I'll just be looking at pullbacks and more upside. So I'm pretty bullish on gold. Again, if we do see that bias on DXY play out, which is the one more bearish leg, the one more sell-off, then we could be seeing a lot of upside for gold, silver, euro, pound, etc. So yeah, that's kind of what I'm anticipating at the moment. But because I've got my hands tied with euro, I don't want to kind of double down so much and jump into gold as well. We can take a look at Aussie CHF. Okay, I'm seeing a lot of CHF pairs requested. What's up, Tatton? Yes, I can take a look at dollar yen. Absolutely. Oh yeah, appreciate it. Thank you. Yeah, I got trailed out of that position. I think last week when we had that bit of a dip. On DXY, what can be the target if it's on a downwards move? Okay, since I'm on the DXY, I'll quickly cover that, then I'll go to the CHF pairs. And if you guys have other requests, seeing the Nasdaq, just stick it in the chat. And if I've got time, I'll get through it. But yeah, for the DXY in terms of downside targets now. The thing is with downside targets, it's not necessarily pro trend. So we want to be safe. We don't want to be too confident with our bearish bias, because the way I see it, it looks like DXY has had this range that's lasted the best part of a year. It looks like price is breaking out to the upside, and I would anticipate more upside because of that. So if I'm going to favor downside in the short term, it's purely just retracement, which I'm not going to get too carried away. Of course, I could be wrong. Maybe price drops, but I'm anticipating retracement for now. So I would be looking at the closest significant area to us, which would be this area here, which is where we took a brief pause for a few days and the momentum came back in. So I'd be looking at basically the high there. That would be my target, but I would also pay a lot of attention just to the support right underneath us, because I could very much see price bounce here, maybe double bottom and then turn around as well. So I'll pay a lot of attention to 100.6 and a lot of attention to roughly 100.25-ish around there as well. So those are kind of the downside targets I'm working with on the dollar. In terms of the CHF pairs, we can start with Aussie CHF. Not a pair which I've been too concentrated with. I haven't really been focused on the price action with this one. Okay, so looking at Aussie CHF, already the price action just looks really kind of corrective. It looks like we're just seeing a whole lot of candles going absolutely nowhere. I know there's been a bit of a trend there, but it looks like a lot of candles are just overlapping. But anyway, Aussie CHF, we are approaching some very interesting prices where we could be looking to turn around. Now, if I was going to trade this market, I would be looking at kind of very mean reversion setups. I'm not really pro-trend. There's not a lot of momentum in the market. I'll be looking to predominantly sell high and buy low. Yeah, I'll be looking to sell high and buy low. It's very awkward where we are right now because we've had, really critical level of support, which is kind of broken and reclaimed. So I could be looking for a retest here, but I just don't feel safe with a stop loss underneath that low. When I'm trading a market like this, I want to have my stop loss kind of above or below the extreme of the current price action. So it would be like stop losses here or stop losses like above here. That's really where I want to put a stop loss. I know this is more of a swing bias, but it's just because the market is quite choppy and it won't take much for us to see a wick like this and take the stop. You can always get back into the trade. There's nothing wrong with that. But it's just naturally I like to have my stop losses kind of away from the noise as much as possible. But that there looks like a reasonable idea there as well. And likewise, if you do push back to highs, I think a short-term sell, if we can see some rejection, makes a lot of sense. But yeah, I wouldn't really try and look for any trend following setups. The market is just very corrective. There's not a lot of momentum present. I would avoid that. I know we've seen a decent trend, but now we're quite flat as well. So I would say keep an eye on support, 0.558, resistance 0.569. Just keep it very simple. When the market is flat and not doing much, you just want to be above the noise or below the noise. Being in the middle is not fun. In terms of dollar CHF, now this is another USD pair. So if we do get the sell off from the DXY, maybe we see a bit of downside with USD CHF as well. In terms of where we're trading, predominantly this is an area which I want to be looking to sell. If I draw like a very vague zone above price action, you can see basically for the past year or so, this is an area which price has revisited on numerous occasions and has just rejected, hasn't really broken through. So this is an area which I'll be leaning short. Doesn't mean price can't break through, but this is an area which, if a decent short setup forms, that'll be a setup I would take. And if I was looking for a buy, I probably would skip it, or I'd have very close targets. So I wouldn't be in that trade for too long. In terms of the 4-hour chart, so we've had this drop here. Looks like price came back to retest the high here, and we have seen some upside since then. That looks like a nice place for a buy naturally, because again, we're following that trend. Again, we are trading in that larger zone above our head, so we don't have to look for the home run all the way back to the high. It could just be a short-term bounce over the next couple of days or so, and that could be a decent move. From a seller's perspective, I'd probably be looking at the high. I'll be looking at the high. I'm not really in love with what's going on here. It's really corrective. I'll be looking to see if I can sell at the extreme, provided we have a very strong rejection as well. And even there, I'll be cautious with targets. But yeah, with dollar CHF, I'll try and play the extremes similar to Aussie CHF. I want to buy low, sell high. I want to kind of avoid what's going on here, because it's just very noisy, a lot of wicks, no kind of real solid place to put a stop loss, I would be cautious. And a good kind of way to think about it as well, when you're looking for a setup, is have in mind the stop loss first before the entry. A lot of people kind of get fixated on the entry, which again, entries are very important as well. The better the entry, typically the better the trade. But the stop loss is just important, if not, I could argue more important as well, because the stop loss defines when you're wrong on that position. And if you have a stop loss in a very awkward area, you might be wrong in the trade, but not necessarily wrong in the direction. And a better placed stop loss keeps you in the trade when you're supposed to be in, and of course gets you out when you're supposed to be as well. And naturally, stop losses below this low and above that high, again, not going to guarantee profits, but if price is going to trigger those stops, it's going to have to work for it as well. So yeah, I would avoid the noise inside of there, but below and above makes a lot more sense. I'll quickly go through dollar CAD and the Nasdaq as well. US 100. So yeah, this one's been interesting. Start of the week pretty bearish. On my weekly analysis, I mentioned this could be an interesting zone for a short. I wasn't expecting such a big move though. I did say this would be my target for the trade. I didn't take the short. But I said, if we can reject this area well, this would be a nice place for a target. And the reason why I was quite pessimistic with the targets is just because higher time frames are still quite bullish. I know we're quite flat right now, but the market is still bullish in the higher time frames. If I'm going counter trend, I always want to be pretty reasonable for my targets, especially on an indice as well. It's not like an FX pair, which I can get away with it a little bit more. But yeah, after we saw that move, we came back into support, and I talked about some buys here yesterday, which didn't really come as deep as I would have liked, but it looks like the momentum's already kicked off already. In terms of opportunities now, I'll probably stay away from the Nasdaq to be completely honest here, because this is really, really mucky. I mean, I can see there is a consistency with these lower highs forming. There could be a case for maybe another one forms. I mean, you see another push back down, but I think you're just placing yourself in a very awkward place for an opportunity. So really for the Nasdaq, I would stay away, or if we come back to major support again, this could be interesting. But I'm just not really liking the price action much with Nasdaq, to be honest. I would be very, very careful there. Okay, we can go through USD CAD. I saw Euro USD mentioned as well. I'm actually long Euro at the moment. Yeah, dollar CAD, I'm looking for some shorts. I'm actually keeping a very close eye on dollar CAD. It's one of the pairs on my watch list, which I'm being patient because it's not quite set up yet to actually find any opportunities, because we're still stuck inside this range. I'm kind of hoping if we can break to the downside, I'm looking for some pullbacks and the push back to this zone. And of course, that's going to be dependent on what the DXY does as well. If the DXY can actually see that retracement we spoke about. But in terms of dollar CAD, I think where we're positioned is a very nice place to start looking for some shorts. Now, the market is just a very choppy market. This is the weekly chart. You can date this back all the way to October 2022. And all we've been doing really is just zigzagging, just up and down, up and down. Of course, we had a bit of an extreme move here, but it's just literally just been up and down, up and down. There's a slight upwards drift to it, but I wouldn't read too much into that. I think you can be looking for just as much sells as you could be looking for buys. So in terms of where we're trading right now, I think price is a little bit stretched. You saw a lot of momentum in recent weeks there as well. And you can see price is just going to take out some resistance to our left. Now, naturally, that's kind of the area which I'll be expecting prices to retrace. We might not get a full, one of these type moves back to support. We could do, but I wouldn't necessarily bet on that or look to trade it, because that would be a huge move. But I would expect some retracement. So that's really what I'm banking on. Price is a bit stretched. We've taken out some major resistance. We're coming into some more significant bearish territory above us. I would expect to see a bit of downside, even if the bigger move is going to take us higher. So I'm quite liking the shorts here with dollar CAD. But as we just said, the market is still consolidating. So until we can get a significant breakout of this range, I would just stay patient. I mean, we could bounce and see a move back higher. I'm just not really interested in that right now. If we could see this, fantastic. There's a short, and this move here is pretty clean as well. There's not a lot of support created here, so I would imagine a pretty clean move back down. And this is where I'll kind of expect price to end up, and then we can make our judgments later on. So yeah, in terms of Euro USD, so I am bearish with this one longer term as well. I'm just long because I'm looking for a short-term bounce. Whether that bounce goes and hits my targets, or fail at resistance, or we just turn around now, who knows. But based on current market structure, we are forming these higher highs and higher lows, and I'm looking for this short-term opportunity. Basically the plan is I'm looking to buy it so I can sell it later on. Now I could be very patient and just not look for the buys and just wait for the sells, but in my experience trading Forex, it's very kind of equal the participants are very equal. So typically if there's a good buy, it's normally worth your trouble to actually take the buy, of course, if it fits your plan and whatnot, and in terms of your risk management and everything. In the long run, it actually makes more sense to actually trade the retracement and the continuation, of course, provided it ticks your boxes. So yeah, I am looking for some short-term upside. We do have this counter trend line, which is proving a bit of an obstacle right now, but we'll see if we can get the break of that. And all I'm looking to see is if price can pull back into here roughly. That's really where my target is for this position, and then I can potentially start looking for some sells if the price action agrees later on. So yeah, I am bearish Euro USD, but I just don't see any buys right now. The market is forming these higher highs and higher lows. I don't want to sell into that really, unless I'm seeing some convincing a break of that trend line and a break of support. Then yeah, I would look for some pullbacks to take lower. So I agree with the bias, just not the timing in terms of right now. Yeah, but I do like the sells on the higher time frames, and particularly looking at the weekly chart, we're kind of getting this bowl shape price action, or inverse bowl pattern, if you will. Looks like we've gone from making higher highs to now making lower highs, and altogether I just see this as a very fatigued bullish trend. So I would expect downside, and I've also drawn the fib from the low to the high here. So you've got the low to the high, and the fib, the midpoint, which is always a healthy place for price to pull back into, is roughly around there. So that's kind of really where my target is for Euro USD. And if we take a look at the DXY, it's basically the same thing, just the opposite way around. So again, if we get the fib from this high to the low, you've got the midpoint there, which more or less kind of lines up with that zone, which is slightly above it, but more or less in the same kind of vicinity. So I'm looking for more upside for the dollar to get back to this area. So 102.5, 103, maybe even 104 is where I see the DXY moving towards. So there could be a lot of swing opportunities for the dollar. It's just, yeah, price action not necessarily favoring buys just yet, at least from my analysis anyway. Maybe if we can get one more move down, something like this, retest support, this could actually set up some really nice buys maybe in the upcoming days, and I'll keep an eye on that. Of course, I wouldn't really be trading DXY, but euro, maybe pound, dollar CAD not so much, because I'm more focused on the shorts on that one. Dollar yen, there could be some opportunities with this one as well. I think this one's a little bit stretched for me right now. We did have that really dramatic sell-off, and price came back and tested some structure very nicely. But we kind of just flew to the upside as soon as the week opened, so it didn't really give me a chance to look for any trade really. It just kind of ran away. This one might be a bit stretched, to be honest, just because we're taking up major highs right now. I can probably find some buys slightly better elsewhere. Hey, but the trend is still pretty clean. Yen still looks pretty weak as well, so I would not be surprised if dollar yen keeps flying as well. But that could be a market to keep an eye on, especially if the DXY does pick up some nice momentum as well. But guys, we have run out of time here. I do appreciate A1 and Nick having me on the stream. If you guys have enjoyed some of my analysis, feel free to check out my channel. But guys, have a great day, have a great end to your week, and I'll see you in the next one. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon. Hope you guys are doing great. I just sat down. I was doing something, and I thought I was going to be late, but I never want to be late, so I'm glad I made it. Hope you guys are doing great. Market is somewhat quiet today after the meeting minutes yesterday. You did have, I personally got a little bit of hawkish tonality from that, but what do I know? The bond market's really going to tell us, right? That's where we got to be looking at. So the bond market, the dollar, why is it not loading here? 2-year yield. 2-year yield had 2 solid days of upward movement, and we are still within this upward trend, I would say, clearly. And so I do think that the market is being a little bit, pricing some restrictiveness. The 30 is pretty flat on the day, but big move up here. We bounce off of that 200-day, continuing higher. And the 10-year has been chopping around in this area here, but we are now at the upper ends of this box. And if we do break out higher, then I do think that we have some dollar strength coming into the picture. But as of now, you do have a dollar red day. I have this level marked up, this 100.5, where I'm really looking at to see if we do get another retracement into this level. Do buyers really ultimately step in and take it higher, or does it fail and the dollar long story is starting to unwind? That is the big question that we have. So my personal opinion, right? I'm kind of going against the grain here, I would say. And I'm saying that there is a likelihood that you do have some dollar unwinding happening. You can see it in the net options flow sentiment tool that we have on the Edge Finder. You can also see that on the top sales page where that dollar score is starting to weaken a little bit. I think the dollar isolated is still a strong score, I believe. Let's go to currencies only. It's getting a neutral reading, but it's getting up there, right? It was at one point very, very bullish, I will say that, but it is starting to come down a little bit and now starting to regain some traction here. But if you go to the major currencies, this is where I pretty much look at mostly, you are seeing dollar CAD now pointing in bearish territory, USD CHF now pointing in bearish territory. And then you have pound right there, borderline of a bullish score. It's at 4. You need a 5 to be bullish. So, if you're taking a kind of glance at everything, right, not just the dollar in isolation, I think that there's a chance that you start to see some of these major dollar pairs starting to roll over in favor of dollar weakness. So someone said in the chat, dollar CAD, I really like dollar CAD to the long side. Now, I know I just said that I am looking for some dollar softness, but I do I am a believer that in relative terms over the medium to long term, I think the dollar would be the stronger currency relative to its peers. So dollar CAD, strong upward trend. I was wanting to participate in this since like way down here, but I never got a pullback. If you look at this chart, it is just continuing up higher. Nothing. It's giving you nothing, right? Like this is like the Nasdaq chart where this is all you get type thing, right? Not even a 1% drop, and then it continues higher. So we're starting to see a little bit of consolidation, potentially maybe some rolling over here at the top end of this level. And I would like a pullback up to somewhere right here, 0 or 1.3900, right? If you put a fib from this recent low to high, that is right there within the 50% retracement level, which is fantastic. So that's kind of what I'm looking for with dollar CAD. So hopefully looking for some dollar bearishness so I can get a buy the dip opportunity in dollar CAD. Now, that doesn't mean I'm going to short this because the fundamentals are obviously very strong and you have some polar opposites. You have at one point, and still, you could say still, a super strong US dollar versus a very weak Canadian dollar. So I think that if this thing were to drop, it wouldn't be more so because of Canadian strength. It would be more so with dollar weakness. So But who knows? Who knows? Maybe Canada starts turning it around. But as of now, that's kind of the dynamic that's happening with the dollar CAD. Dollar yen here. Maybe this could be a double top. Too early to tell, but I do think that as long as you continue to see higher U.S. yields and higher U.S. fundamentals or better U.S. fundamentals, dollar yen can just continue grinding higher. But ultimately, I am looking for a buy the dip. We did get into this 160 handle, and I questioned the idea of going long, and I didn't do it. I'm shooting myself in the foot now, but again, I would like a pullback into maybe like, I don't know, maybe 160. If we get to 160 again, I'll take a stab at it. But something tells me that if we get to 160, I'm gonna ignore that, and I'm gonna say, you know what, let's get 158 instead. So we'll see what happens. But ultimately, buy the dip on any meaningful, really good discounted dips in dollar yen would be my approach. So similar to dollar CAD, dollar Swiss. This is where I'm showcasing my short term view on the dollar, where you think a little bit of softness can happen. I have this dollar Swiss position here. It's flat. It's right there by my entry. But I do like that you are basically rejecting this higher time frame level of resistance. This has capped advances many times before in the past, and I have my stop loss above structure. So this kind of lines up right there with the DXY as well. So this level of resistance. So if the DXY obviously breaches this 102 level, then definitely the path of least resistance will be higher. And at that point, I would exit my dollar Swiss position and maybe look to go ahead and like short the euro. Maybe I can fade the Kiwi. Like Kiwi is really strong today. Look at that. So maybe the Kiwi, taps into this level right here, this 200-day moving average, and then I can exercise my, medium to long-term dollar long story by shorting Kiwi at this level. I actually like that a lot. So what I'm going to do is I'm going to put an alert right here in this zone, anywhere here. And if you were to get Kiwi tap into this level, and if the dollar is still looking pretty good on a relative basis, I'll go ahead and fade the move to the downside. So yeah, that's pretty good. So right now I'm short dollar, right? Hopefully looking for some more pressure so I can ultimately pivot into something like short Kiwi dollar, short euro dollar. I think that makes a lot of sense. So yeah, that's kind of what I'm looking at. Oil, sure. Let's look at oil. It's down 2.34% today. Anything meaningful on the Iran stuff? Let's find out. And you guys can tell me too in the chat if something happened, but I don't think anything crazy happened in terms of the situation in the Middle East. Yeah, I'm not seeing nothing, and I'm not gonna scroll the whole stream on this. So if you guys have anything, feel free to drop that. But I don't think any new developments happened. Let's look at currency strength too. Dang, look at that divergence there with Kiwi dollar just taking over and everything else is flat. That's pretty good for our Kiwi longs, which I'm not in. But if you are in Kiwi longs, congratulations. I could say a lot of it has to do with that recent hawkish commentary from RBNZ, and now you're starting to see some cooling off in sentiment here. You can see that oil is lower, so that's probably improving risk appetite. VIX is lower again. So look at this. VIX popped yesterday, hit that 200-day moving average, and completely faded today. So I would say today's a risk-on day for sure. Look at Nasdaq and S&P recovering there. Oh, look at Nasdaq. Tapped into that level that I wanted, and I didn't even know. What's Nasdaq doing on the Edge Finder? Let's look at the indices. Let's look at the whole basket. Actually getting a neutral reading of -1, so I wouldn't have taken the trade anyway, but okay. Definitely a risk-on day, though. Yields are starting to soften on the 10-year as well. Pretty good. That's going to be good for gold. Very good for gold. Gold is kind of chopping, though. I would say it's really hard to make a decisive call right here. There's going to be a trade-off. So if you make a decisive call within this level here, you're obviously going to capture more of the move, but then you're uncertain as to the actual conviction of the move. Versus if you wait for either one of these zones to get tapped out of. So if you have a breakout to the upside, this level of resistance gets broken out of, then you probably have some bullish momentum, and you're probably at this case the trend or the theme is gold long. Vice versa, if you get a breakdown of this level of support here and you have a continuation to the downside, that most likely than not the short gold story continues, and you have a pretty good probability that it's going to continue. So right now you are in this boring area here, and what you have to do is just sit on your hands and do nothing. So it's kind of that's what I'm doing here with gold, right? You could say that you have this downward trend line here too, kind of acting as resistance. So maybe if you break out of here to the upside, that will be good. But me personally, what I would like to just see more is that we're clearly in this range here. I need to see a breakout or breakout above or below to really have some added conviction there with the metals. Silver, same thing. You're just chopping down sideways, grinding lower. I don't like silver, not one bit. I wouldn't trade it at all. So that's that. Aussie dollar, what is Aussie doing? Reacting off of this level of support here, that 200-day moving average. It's getting a neutral reading on the edge finder though, so I'm not really too convinced to go ahead and take it to the long side. But again, technically speaking, if you were to get a fundamental score improving on the edge finder and you still have this very attractive level of technicals where price is at right now, I would definitely consider taking this to the long side. Let's look at Aussie Kiwi too. Let's see. Oops, wrong chart. Aussie Kiwi, bang. Okay, so mean reverting currency for sure. If we were to get down here, and I'm looking to eventually fade the Kiwi dollar, maybe I can trade Aussie Kiwi to the upside if the Aussie is the relatively stronger currency pair. So I'm going to put an alert right here too. I'm going to watch this one, and I'm going to watch the edge finder reading. Let's go to minor currency pairs. Everything yen is getting crushed too. It's getting a neutral rating, so that's good for now. Let's look at yen. So yeah, the yen basket continuing to weaken. I mean, let's look at JXY. Man, let's get a consensus here in the chat. Do we think Bank of Japan is going to intervene anytime soon in the next 2 weeks? Yes or no? Type 1 in the chat if you think yes. Type 2 in the chat if UJ is going to like 170, 190. I personally have no idea. I have absolutely no idea. Ideally, I would want a pop in the yen so I can ultimately fade it. Like I like this level right here, 64 on JXY, where we have that 200-day moving average. This is going to be 4% away, 3.5% away. So I would love that. I would love that. That would be like a trade of the year for me. But those type of trades you have to be very patient and wait a long time for, I would say. But yeah, that's kind of what I'm looking for. And if you guys want to, continue incorporating fundamentals into your trading, all that good stuff, I definitely would recommend using the Edge Finder. It is on sale for 45% off. If you tell them that you're from the stream, 45% off. I promise you guys will definitely love the tool. It is amazing. It has helped me so much, and it helps a lot of traders everywhere as well. So definitely go ahead and get that. And if you do have the Edge Finder, or if you're looking to get the Edge Finder and you're hesitating and you want to understand how you could really maximize the tool, I would then say scan the QR code at the bottom left here of the screen. Join the A1 workshop. We're doing one tomorrow morning. We are operating through this macro landscape, getting everyone up to speed with macro, maximizing Edge Finder. It is fantastic. So go ahead and sign up there. We have a lot of people here that are joining. So I love to see that, and I've got a lot of positive feedback that has been very helpful. So definitely go ahead and join the workshop if you are interested in just exploring macro fundamental trading. So that's what I would say. Let's see. We have Marco here in the background joining me here shortly. I think I covered everything from Forex, kind of my thought process on Forex, the metals, Bitcoin. Let's look at Bitcoin here. Might as well, right? We zoom out. Let's see what's going on with Bitcoin. Just kind of hanging out right here. Ultimately, I want to see 50,000 Bitcoin. I think that would be like the next wise target, but it's really not doing much. I would say maybe if we get a flare up in Japanese bond yields, which something's got to happen eventually. I mean, this thing is crazy. It's just grinding up higher. This is definitely like a big troubled point that the market is just, I guess, not paying attention to at all. Because yeah, this is not good. So maybe something happens here that trickles into Bitcoin and then you get another flash crash. But for now, Bitcoin is just kind of ignoring it. Marco, good morning, man.
Hello. How are you?
I'm pretty good. How are you?
Cool. Doing pretty good as well. Trying to decipher why one of my stocks is up 7% on the day. So just seeing if some earnings came out.
What kind of stock is it? Is it a tech stock?
It's health technology. So
Oh.
no earnings in 21 days. Well, I don't know. But seems to be doing well at the moment. So
Which stock is it?
it's Guardian or Guardant
Really?
Health. Yeah.
Ooh,
GH.
that's Alizé's biggest competitor.
Really?
Yeah. Yeah.
Oh. Well, I'm
Yeah.
sorry.
We'll see. Yeah, they probably have like a test FDA approval or something went through.
Mhm.
I'm gonna tell her right now after the stream she's gonna get pissed.
You should ask her to give you some insight about the industry, because she probably knows when her company or competitor's company has something in advance. I'm not sure if it's legal, but she can write it down on a piece of paper and you can just stumble upon the paper.
Yeah, they have you on lockdown, man. I don't know how it is abroad, but
Okay.
like they take that kind of seriously. I think in every major corporation, but like
Yeah,
you
absolutely.
sign like a paper and it says like, no insider trading, none of that. They
Yeah.
track her stuff because like all of her like retirement stuff is like handled through them, so
Mhm,
they
mhm,
can, I
mhm.
think they can kind of see. But as far as like household, right, like technically I guess you can, but then there's a risk and it's not worth the risk. But yeah,
Absolutely. Unless you want to end up like that Charlie Sheen in the Wall Street movie. Have you seen that?
Charlie Sheen, which one's that? Which
Just
Wall
Wall
Street
Street.
movie?
It's just,
I
I
don't
think
think.
it's just called Wall Street with Michael Douglas, Charlie Sheen, and yeah, basically like one of the best trader movies, I would say. And in that movie, there's a scene with the insider trading, and then Charlie Sheen gets pinched by the FBI or whatever it is, by the SEC. So if you haven't seen it, or anyone in the audience, if you haven't seen it, it's like one of the best. I would say it's top 3 trading related.
I'm not the best with like celebrities and like their names, but if I see their faces, I will know. I just
Yeah,
put it up on my second monitor here. I think I've seen the movie a long time ago, but I don't really remember
you
the
probably have.
storyline.
You probably have.
Yeah.
But yeah, it's pretty cool. It's a fun movie.
I'd say this top movies, top finance trading movie ever of all time.
Okay.
Marco, you can answer this in the chat if you guys want to answer this. Favorite markets related movie? I would
For
love to know.
me, it's gonna be The Wolf of Wall Street, which I know doesn't have anything to do with actual trading. It's just scamming people, but it's kind of finance related, so I'm gonna have to say that. Second best would probably be The Big Short, I would say, and it's probably like the best movie if you want to learn about real investing, real trading. The Big Short would be number 1. What about you?
I love The Big Short. I think they do a great
Mhm.
job at like kind of educating maybe people that don't know what's going on with like their little examples, like Selena Gomez when she was explaining CDOs and how people make bets on bets on bets and it just kind of stacks on at the roulette table. I like that a
Yeah.
lot. But I would say my favorite one is probably Margin Call.
See, I
It's
haven't seen that one, so
it's
I'm gonna
more
have.
realistic. It's more realistic.
Okay.
It's like
Yeah.
essentially um the Big Short is basically like the outsider's perspective or people that are capitalizing on that, on what was going on, the actual collapse.
Yep.
Margin Call is more so inside. I think it's based off of JP Morgan too, or one of the big banks that basically
Mhm.
helped bail someone out, but or no, I think they went under ultimately. But basically Margin Call is a movie of some analyst, junior trader, whatever, realized what was happening on their books. They were super overexposed. That same night they escalated to a VP or a managing director, and then everyone comes in, like the CEO comes in on a helicopter at like 3 a.m.
Mhm.
and all they do is strategize on like how we're gonna get out of the situation. And then the next morning, they're basically offloading all of the books. They're like, look, we're most likely gonna go under here, but let's offload this thing as much as we can and pass on this negative or bad debt onto other people so we don't get most of the damage.
So they
Um,
basically screwed other people.
Yeah. So like before the market opened, they were just giving out these crazy deals like, hey, you want to buy X amount of this, whatever. And people were like, okay, sure, right. But like as the day developed, people were catching on what they were doing. And so they were able to pass on this debt or whatever less effectively. And so
Yeah,
they were like,
yeah, yeah.
they're like, if you can save us here, we'll give you a big bonus. You're not gonna have a job, but you'll get a big bonus, and we'll call it a day. It's a really good movie.
I'm gonna have to watch that with my fiance most likely. But the last time I watched The Big Short with her, she liked the movie, but every 3 minutes there was a question, like a technical question, so I couldn't really watch the movie and explain everything. So we had to like pause every 3 minutes. But it was fun.
Have you seen Industry or Billions? Ray Beast is putting that in the chat.
No. I saw the Wall Street #1, Wall Street #2, Big Short, Wolf of Wall Street, one with the Liam Neeson, the Rogue Trader. That's a great movie. So the Rogue Trader, not a lot of people know about it, but if you want to see like what happens when a gambler and a crazy or like very a trader that takes on a bunch of risk gets a job in one of the biggest banks in the world and gets an account in the billions and then blows that account and takes the bank with him. Well, the movie Rogue Trader is for that. So it basically explains what happened with that trader and how the whole bank actually went down because he kept on stacking into his losses.
That's the guy from the UK, right? If I'm not mistaken. Yeah.
Yep.
He was basically martingaling to
Liam Neeson
zero.
or Liam Neeson, or there's an actor Liam Neeson. I don't know. I get confused, but it's some sort of a Neeson. That's his surname at least.
Yeah, man, I love those movies. I could watch them all day long if I could.
Yeah, absolutely. But what about our movie? What about the current movie? So what are you seeing today?
The current movie of 2026, where you have
Trump
war,
and
where you have
2026.
war and inflation and Federal Reserve and central
Yep.
banks are starting to make decisions. Well, that is a movie to be living for sure. I got a little bit of hawkishness, Marco. I'm not gonna lie. Yesterday, in my personal opinion, I would say. However, bond market is softer today. Maybe because it was already priced in ahead of the meeting, so maybe the market was like already kind of waiting for that, and then the market got exactly what it thought it was going to get, and so now it's just a matter of operating after that. So you are seeing some dollar softness. Kiwi dollar is definitely moving up. The way I see it is this: I'm still kind of betting and positioned for some temporary short-term dollar softness. I'm illustrating this through dollar Swiss short. The edge finder is still in my direction here. So, if we go to the majors only, you can see that dollar Swiss is bearish. Dollar CAD is now bearish too now. So that's new. And pound dollar is neutral. That just changed literally just now because it was before like 30 seconds ago. So I'm still in that theme. However, as that theme is developing, if you continue to see dollar softness, I am looking to ultimately fade something like a Kiwi dollar, right? If Kiwi dollar taps into 0.58, that's where the 200-day moving average lives, I would love to short that. Reason being is we have seen hawkish commentary from Royal Bank of New Zealand before, and it's very short-lived. This is one example right here. This May 27, 26 area right here is where Royal Bank of New Zealand was surprisingly hawkish. Market priced it in, but eventually it walked it back and some. So here I'm kind of expecting the same thing. Hawkishness, cool. Let's go ahead and price it in. But then I ultimately want to fade that and, revert the move and some. And maybe I can have a trade that looks like this. Short position here. Stop somewhere above the structure. Doesn't matter. And then target somewhere like 0.55550 right over here where this level support lives. That to me would be a really cool trade to take, because ultimately I do believe still that the dollar would probably be the higher yielding currency relatively on a medium to long term basis.
Would you rather play it for something that's not a dollar? So, for example, GBP NZD, although GBP NZD is already doing pretty well as far as the GBP goes. So I'm just wondering if I can play it. I really don't want to sell the dollar, or sorry, I don't want to buy the dollar, which means I don't want to sell NU. But maybe once we come to that level, the dollar bearishness could be exhausted, so some dollar bullishness could be needed. So that's a good point. But I'll take a look at GBP NZD or Euro NZD if I can do that same sort of mean reversion, because the one in June was definitely very sort of easy to play, or not easy to play, but easy to spot. You had a lot of New Zealand dollar appreciation, the RBNZ super hawkish comments, and then it all got walked back and then some. So it got into a massive downtrend after that.
Yeah. For the trade idea, I think I'm going to stick with the major pairs just because I'm mostly trying to trade US macro more than anything. So I'm more so like the bet is on dollar softness or dollar strength. But one where I'm looking to kind of diversify is the yen basket. So if you get a pop in the yen basket, JXY to like 64, where it taps into this 200-day moving average, that's about I think we said 3 or 4%. Yeah, almost 4% move. Then I would buy CAD yen, Swiss yen, Aussie yen, Kiwi yen, dollar yen to the upside. I would love to take that trade. That's going to be something that I have to be definitely patient on because no one knows when that will happen, but it's something that I'm definitely interested in. Fingers crossed there is an intervention around the corner that can help me get there, but you never know. But this is one of those things where like I'm going to be patient. It's going to take however long it's going to take, but when it happens, I'm going to be ready to act, and it will be a really, really good trade. I would hope that is one that comes very far in between. You know, every once a year, twice a year, you get a really good monster trade like that, and I'm trying to play the patient game on the yen basket like this.
Okay, interesting. So what do you think about this weekend? So Trump usually sort of escalates during the weekend and then de-escalates before the market open on a Monday. Do you think there's a high chance of that this weekend? Would you recommend to go flat into the weekend? I mean, not financial advice, but if you were running a lot of positions, what would you do? Let's say that's kind of the question.
Dang, man. If I had a lot of positions on, it depends where they're at. I would probably flatten. I say this because I have no skin in the game, and so my opinion right now doesn't affect me because that's not my situation.
You only have $1 Swiss, right?
Yeah, and that's by design because I don't want to overcommit on a position that's still, like, for example, like dollar index, right? Let me be honest with myself here. We're still in the range, right? So the easier play would be to commit after you get a break above or below. The trade-off is that you make less or you capture the rest of the move. That's perfectly fine with me. So I have the one position that I committed to a little bit early. But if I were in the camp where I had multiple positions on, I don't know if they're all in profit or all break even, whatever. But I don't know. I feel like this time around, Marco, like the market has been really good at spotting bluff or whatever. But we had like some significant progress. We had the MOU signed. You have the Strait of Hormuz is opening up and stuff like that. Like it's a lot of progress to be walking back if you go full on escalation mode. So I think Nick expressed this, or Chris, one of the two, or maybe you too. But like if this time around you do have an escalation, like you might as well go all out and finish the job. Like no more of this silliness going back and forth, you know? So that's the risk of having the position open. In my case, it's only one position, so I can care less, right? Like it's just, you know, one position. But if you have a lot of exposure right now, this weekend would be kind of risky in my opinion.
Okay. Yeah. I also listened to Chris and Nick yesterday. Was it yesterday? Wednesday? Yeah. So they talked about the midterms and Trump probably not wanting to kind of poop all over his chances. So maybe he escalates after the midterms.
But like what chances though? Like you're not elected anymore, you know? Like
Yep. But he does have a lot more power if Republicans get back in, right?
Yeah.
So his sort of laws and recommendations get passed much more easily if he has the majority in what is it, the House or the Senate or?
Yeah, I guess that's the risk, right? Like all of the policies that you put in place getting unwinded as soon as you leave
Yep.
if you lose the majority. I get that. I get that.
Yep. 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 So that's kind of the main thinking behind it. Um, and no, so see, he can't get reelected, at least not yet. He may pass a law where he extends his stay for another 4 years. But or as you mentioned, if Vance becomes the president and he becomes the vice president, but just in terms of power and how much he can do in terms of new laws and starting some new crap. So yeah, we're gonna have to wait and see on that. I think gold is recovering as well today, so we're getting kind of a risk on day. The S&P is up, gold is up, the dollar is down by a little bit, so very little movement. I think the next catalyst that we're waiting for is going to be the CPI print. So
Hmm.
I'm just thinking about it, like what could happen in the next few days that moves this market, and that's scheduled. I pretty much don't see anything, unless of course the Middle East heats up. CPI is the next thing that's gonna move the markets. So I think we remain mostly flat, mostly kind of range bound and quiet up until that CPI print. We're still not getting the forecast. So once we get the forecast, that'll give us a bit more clarity on what the sort of the experts are expecting. But I'm expecting definitely a cooler print. I'm expecting that natural fall in inflation. I can definitely see it at the gas station. So I think I filled up my car 2 times already, and like the price of diesel is pretty much back to pre-war levels. So 1.5 euros per liter, which it
Really?
was back in February. Yep.
Okay. I don't see expectations just yet. I guess we're still too early for that.
Yep.
So I was kind of hoping for something there. But we talked about this yesterday, Marco, but the market was basically ready and accepting rate cuts. Like we saw on CME Fed Watch probabilities kind of dialing that rate hike bet down a little bit from like 2 or 3 or 2.5 rate hikes to now one.
Mm-hmm.
So we were on that trajectory. But then you have a little flare up in the Middle East. So
Yep.
if the president truly wants what he wants, which is lower rates, and he wants to help the Fed justify doing so, then I think you walk back the war because it's something that can just be taken off the table, right? Like tariffs, right?
Yep.
You self-inflicted this into yourself. You can also take it off the table as well. If he truly wants that, then maybe on the weekend or something, positive development happens. But if that gets thrown out the window, then then go ahead and escalate, and then it is what it is.
Yep. So it's a risk. It's a risk going into this weekend, and I would agree with you. I wouldn't go in with massive size. I wouldn't go in with massive exposure. But there's also a big chance that everything on the weekend gets walked back on Monday before at least before the stocks open. So
Right,
that's
right.
your put, as they say. There's like a Trump put on the markets or a Fed put, whatever you want to call it. So, which basically means if the stock market especially, falls down too much, Trump will try and bring it back up, as he did numerous times in the last 2 years. So that's kind of why I think that's why the stock market has done so well this year, even though we had the war in the Middle East, even though we had crazy price of oil. I think the stock market knows if there's any major bearish catalyst, Trump will walk back, the Fed will step in, they will turn dovish. Like there's a put that makes the investors at least feel very secure in their positions.
Yeah, I mean the VIX is doing that. It did it really well yesterday, right? Talk about fading that. We tapped
Yep.
into the 200-day, which it was 18, 19, so it's nothing crazy anyway. But again, you had a
Hmm.
flare up yesterday, faded today. Yields as well are starting to fall off now. So the U.S. 10 years down 0.5%, the 2 years on track to get down 1%. Oil is lower too, rejecting that 200-day moving average. So the market is clearly putting this thing off, pun intended there. But
Yep.
yeah, we'll see what happens. I'm happy to see some dollar softness today. My position was in break even. Now I'm up a little bit here, so that's cool.
Hmm.
Again,
Hmm.
this is the only thing I got going on really, so doesn't really affect me. But like you said, Marco, too much exposure into the weekend, especially now that we have this thing again. Like that was the annoying part about like trading in the last couple months. Like if you did have a lot of exposure on, or if you were directionally committed to one direction, then that was a huge risk the weekend, because things would either hit the fan or not. So
Yep.
seems like we have that dynamic back in play. And so you just have to, risk accordingly and adjust a little bit. But
if you
yeah, man.
survive the Monday Open, you pretty much your positions went back into profit. So if your stop loss wasn't hit over the weekend on the Open on Monday, you probably did pretty well in your positioning, because like I know with my stuff, it went into the red zone because Trump said something, did something, and then it all got walked back. If I survived, the position usually did what I anticipated it to do. It just took a bit longer and with a lot more swings up, swings down.
Yeah, the weekend and watching Financial Juice was entertaining.
Yeah.
Like you're like, all right, what is it gonna look like once we open? Like, come on, give it to me. But yeah, all right, Marco. Well, I'm gonna go ahead and pivot out here, man. Thank you so much for the conversation, and we'll talk tomorrow. And we'll see. Hopefully though, from for the sake of my trading and for the sake of the world, this kind of gets walked back, and there's true peace in the Middle East.
I would hope so. I would definitely hope so. I thought we were finished with it, but looks like there's still some more to come. So hopefully
Me
it does
too,
get
man.
resolved. Yeah,
I had hope, but I've been proven wrong many times, where I always say, I'm reflecting on this, but I used to always say, nah, this is the time, Marco, it's gonna be over, and you were like, nah, not yet. But I guess it's not yet. But all right, man, take it easy.
You too, and see you tomorrow.
Alrighty, bye.
Goodbye. Okay, so let's continue with the regular program. This is the stock I was talking about at the beginning of the stream. So let me just check my account if that is working okay. And it is. Okay, looks fine. Just let me see if GH opened. So GH, yeah, looks to be doing okay. And let's get the charts here. So as far as my stocks go, I'm in Dell. This is a new position. And I'm in GH. So this is a new strategy that I'm forward testing. It's just a simple breakout strategy. So here is the main watch list, the things that are ready. So I have two positions, and then I have the things that are just about to break out if they can. The key with this strategy is, see, this is a triangle pattern right here. So the price is kind of narrowing into a triangle like this. So essentially, the key with the strategy is the SPY needs to be in an uptrend. So the SPY needs to be above the 50, the 20, and the 10 EMA, and preferably not in chop. So chop is not the best market condition, but still, if the technicals are above the EMAs, I'm gonna have to take the trade and follow the positioning. If we go back to the regular program, what do I have here? So I have a sell on USD JPY, which is not doing so well. The swaps are getting pretty hefty, so that's not the best. And I have a buy on GU, which is actually doing really well. So GU is going up pretty nicely here. Looking to trail the stop loss? Maybe not yet. I don't know. So I'm probably going to put it below 1.3300. If you're in the A1 Discord, you will get an update on this, because again, all of my positions, they go into the A1 Discord. All of my trade ideas, all of the trade signals, all of the market breakdowns. And if you want to join the A1 Discord, well, you can do so using the code Marco, which gets you 25% off. Okay, so the link to join the Discord is in the description. On the watch list, I also have Euro GBP, because lately we have been seeing some British pound outperformance. The British pound has been doing really, really well. Let's also see GBP NZD. I think that story, okay, so today It's starting to pull back, but this could be a nice mean reversion trade. Same thing as what happened on the 27th of May. So you got a sell-off and then a quick rejection of that. Could happen again. Could be that the RBNZ is again too hawkish, okay, and that it gets balanced out. But as far as the global markets go, I'm seeing the British pound is starting to gain some strength, outperform most of the other currencies that are out there. And maybe I can get in on the downtrend. So if we can pull back to the 20 MA, if I can get a bearish print on the edge finder, I think it would be a good opportunity to try and sell. So let's look at the edge finder here. Euro GBP. Neutral score is -4. So I need this to flip to -5, and then it's going to be game on to try and take a stab short. I'm also seeing the chart, and the first major level of support is around 0.845. So there's quite a lot of room to go down. All right. There's quite a lot of room for the price to go down to the first major level of support. So this is not a bad position. This is really not a bad position. Looks like the political situation in the UK is improving. Comrade Keir is out. I think the markets are getting excited about that, excited about the new prime minister, and the new PM could be bullish for the currency. And the last thing, I have the Nikkei. So on my main watch list, I also have the Nikkei. If we look at the edge finder, let's take a look at that. Neutral score, -4. This is not what I want to see. So I want to see a bullish print on the edge finder. And then I would be interested to get in on a buy position on the Nikkei. It's holding the 20 MA well, so the technicals are fine. The chart looks fine. We are sitting at the level of support. So we are sitting at this trend line, which is rejecting nicely. I'm just waiting for a bullish print. That's the last thing that I need. So the bias to flip to bullish, okay? I do want to mention the sponsor of today's video. If you're looking to get funded, do consider checking out Ola Prime, okay? Because with the code A1 Live, you can get 35% off. So the link for Ola Prime is in the description. If you look at their Trustpilot, it looks pretty good. So the score is pretty high, 4.5, I think 2,500, 206,000 or 2,600 reviews. If you know anything about the prop industry, you would know that this is a pretty good score right here. And one thing that I really like, is that they don't have a consistency rule on some account types. So yes, it depends on the account type, but some of those don't have the consistency rule, which if you're a swing trader, and I am, the consistency rule really can make things difficult because you cannot really extend your winners. So if let's see, GU, Alan just sent me a funny message, but anyway, if you look at GU, it's already running like 3-point-something%. And I would have to close this if I had the consistency rule, because you can't have massive winning days. Okay, it's a problem with the consistency rule. So Ola Prime doesn't have it, which is why I like it. I still have 1 more minute, so let's see some comments. Comrade Keir, yes, he is out. He's done. So I think he stepped away. I think that's good for the UK. I think he was a horrible prime minister. But again, I don't know much about the political situation there. I just know that it looks like the markets are seeing that as bullish for the British pound. You're getting, I think it's BXY. That's what someone said in the stream yesterday. So BXY, this is the British pound currency index. You're getting some good outperformance for the BXY. And that's a very, very good sign. So the markets are taking that as bullish. And again, into that, you also have the dollar weakness. That's why the GU trade is doing so well. But I think this could continue, especially if the dollar weakness continues. I think this trade could continue going higher. Of course, I will be trailing the stop loss as the price continues, or if it takes me out, it takes me out. That's about it for my segment. I want to thank you very much for watching. You can catch me tomorrow. Do check out Ola Prime, 35% off with the code A1Live. Do be patient as well. The next big catalyst, my thinking is the next big catalyst will be the CPI print next week. Up until that time, I don't think we'll get much. That's about it. I wish you good luck in the markets. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello. Happy Thursday, ladies and gentlemen. Hope everyone is well. Not much going on my side today. Got stopped out. Sorry, I didn't get stopped out. I got the Nikkei position that we were in long, ended up closing out on a break even. I personally did get stopped out, which is unfortunate because I mistyped the stop loss. So I had to stop here when it should have been down here. So sadly, I was stopped, but decided to close it at break even for everyone else. So yeah, I mean, this week has been less than successful, to say the least. So minor, well, actually, yeah, a bit of a loss on the Nikkei. Gold is pretty much looking like it's going to get stopped to break even. And I think that's kind of it. I don't really think there's much else to discuss with you in terms of what's going on with me. But yeah, just a very, just not a very good week. Not in terms of, nothing crazy, but just disappointing, I suppose is the word. Sluggy, hello. Jeremy, good to see you. Max says, hey James, looked like I got played on GPNZD. We spoke about I short too soon yesterday. Yeah, the UK, or not the UK, sorry, I should say the pound, the sterling is pretty strong at the moment. As I always say, I don't think it's a long-lasting thing. Oh, it's easy for me to say it's not long-lasting. How long does that actually mean? I don't think this is a core or structural strength from the sterling. I think this is, again, as I've been saying, it's more just optimism around the political stability. Over time, I would expect it to continue to weaken. This country is on a massive decline. So when it comes to going short the pound, long the pound, I've got no interest. I'm more just waiting for something to actually get me into short positions on the pound. That hasn't really happened yet. We did it earlier in the year on pound New Zealand. That was a fantastic trade, but that was more driven by the Australian dollar rather than the pound. So yeah, it's one of those situations where, short term, yes, fully admit it's strong, it's doing well, it looks good to be a buyer. But for me, I just can't do it. I cannot bring myself to do it. Sad story with the Nikkei. Oh, it's all good. It's one of those things. One of those things where I click on Trading View and it's like, oh, it's just missed stop, and we've got this really nice bullish candle. I go to MetaTrader and I've been stopped out for 1.5%. Oh my god, human error. That's what it is. Or lack of concentration. Mr. Replay by 2 pips. I'm not really sure what you mean by that, Max. Karatham, however you say your name, S2288. Hello. I don't want to butcher your name, so I'll just call you 2288. I'm Nikkei. I'm in with the Nikkei with SL at the swing low. Yeah, I think it's still a decent buy. I might get back into it later in the week. It's just at the moment, I'm a little bit on the sidelines. I'm not overly satisfied with where the markets are at the moment. I think we're seeing a little bit of push and pull. So we've got, we had the Iran situation initially that, drove oil up and we had that whole dynamic. Then the focus moved to the Fed, dollar strength. Now we've had worse data. It's not really looking like we are going to get that rate hike that the markets were expecting by the end of the year, or we might do, but the expectations, I think, are diminishing. And now we've got massive escalation. Well, we've got escalations again in the Middle East. So the landscape for me has gone very cloudy yet again. 1 to 2 weeks ago, very simple, look to buy the dollar. Right now, that's completely changed, and there's nothing I can do. So portfolio-wise, I'm pretty flat. Euro Swiss is still running, pretty much not doing anything at all. And again, gold is looking a bit tricky. But even gold, I don't really like at the moment because the edge finder has flipped to +2 on gold. And again, there is a Middle East situation that could, in theory, drive gold lower. But the problem is it's just not doing anything. And I think it could be 2 different things. Either the markets have completely priced in the escalation priced in the situation the first time round. So now it's escalated again. There's not much to reprice because it already happened. Or the markets just don't care. It could be either one of those 2 things. It doesn't matter which one it is because the markets are doing what the markets are doing. And gold clearly isn't reacting the same way. So I'm not going to lean on that factor. And then again, we go to the edge finder and it's got a score of 2. So it's like, how can I stay short? If anything, actually, I quite like the idea of being a buyer on gold. Not yet. So I would need to see the 2-year yield do something. It's kind of just sideways at the moment. So I'd need to see some decisive move on 2-year. It might give me a bit of a better idea of what the markets are expecting going forwards from the Fed. And I'd need to see some clarity on the geopolitical landscape as well. And again, that might trigger me into a long position because as I've been saying, let me go to a fresh chart. I don't want to remove the drawings I've got. As I've been saying with gold, I think this could, and I want to underline and bold the word could. I'm not saying it is, could be a fantastic buying opportunity if we get the catalyst to do so. So weekly time frame, really nice pullback on a multi-year rally. This, again, on higher time frame wise, this looks very reasonable and very healthy. Yes, on the H1, H4 daily, it does look quite horrible. But then, we scale up to the higher time frames. It looks pretty good. The RSI is a little bit oversold. We're hanging around this weekly support level. We failed to break lower 2 weeks, actually 3 weeks, and now this week as well. So on the 4th week of failure to break any lower. So I think these arguments to be a buyer on gold are starting to line up, and the edge finder again is starting to tick to the upside as well, going from a -7, -8 to now +2. So if we can start seeing the data in the US start to deteriorate, and we can get the Fed hiking idea out of the markets, then yes, I think buys on gold could be really nice at sort of the current levels. But we'll see. Again, that is a big could. Doesn't mean it's going to happen. Can you analyze unusual moves on oil? What's going on? What do you mean? Well, it's exactly what I was saying. We had we've had crazy amounts of headlines coming in about Iran, and it's just so meaningless to the market. We had a pretty nice move to the upside yesterday, retesting a little bit of structure. However, absolutely no follow through whatsoever. Yesterday, I was kind of expecting sort of 84, 85 to get hit on oil just to fill this gap, but again, the markets just do not seem to care. In terms of unusual moves, I'm not really sure what you're referring to. This doesn't look like anything unusual. Maybe a little bit of an unusual situation, but in terms of price action or moves, as you said, I would say it's pretty normal. My issue is I want to short AUD, but against wait, hold on. I want to short AUD, but against what I'm still not sure. Oh, okay. I get what you're saying. You're not sure what to go Go short Australian dollar against. Pound Australian was bullish. I'm not sure if it still is. Yeah, I mean, if we're using the edge finder, the most clear expression for the Australian dollar short would be pound Australian long. But I don't know, actually. It's a score of 6, so maybe there is some potential there. Let's see. I think we looked at this yesterday or the day before. Yeah, so I remember this. What we were looking at really was this daily resistance level. So the double top that we're coming into on this daily doesn't look good. And this coincides with the 200 daily moving average. So we're coming into a very significant zone of, a very likely rejection. Does that mean it can't go higher? Of course it doesn't. So we could go down to the H4 and we could basically just look for a pullback on the H4, look to go long. And because, we would still be buying into this daily resistance to the 200 moving average, it would be maybe sensible to trail stops quite aggressively. If we do get a large rejection, you don't want to get caught in that that downside. But as I've been saying with pound Australian, same thing for Euro Aussie as well. It wouldn't be a shock to me if we sort of revisit these previous lows. This would be around 2.0. I think that would be quite reasonable. But yeah, I don't know. I don't want to hold the pound, so it's not something I'm going to trade. James, do you start sell for pullback? No, to be honest, I don't see anything on the dollar pairs right now. I think really you've kind of missed the whole idea. Not to be rude, but I think 1 to 2 weeks ago, again, as I was saying, the dollar was a simple buy. All we had to do was buy the dollar. And that was very clearly expressed. We had the edge finder, we had the Fed, we had really good data. It was just so obvious and so clear. That has completely changed. We had worse data coming out of the US last week. We're not really seeing the Fed as hawkish as I think the markets were pricing in initially. And the fundamentals just aren't really there. If we check the edge finder, we've had the dollar pair. In fact, the dollar's slightly bearish even now. So we've got pound CAD and pound Swiss reading bearish, whereas we did have euro dollar, pound dollar, New Zealand US dollar, Australian dollar, gold, silver. It was so obvious. I keep saying obvious. I'm not trying to say that I knew everything. Obviously not. But I'm just mean that it was a clear theme on the edge finder that the dollar was strong. We just don't have that right now. So I don't think this is a pullback to now sell pound dollar. If anything, I think this is just a correction of what we had when the dollar strengthened on the Fed. This is untradeable, in my opinion. There's no fundamental direction for me to benefit from here. What about New Zealand CAD? I think the New Zealand dollar is doing really well, actually. I was looking at the New Zealand dollar this morning because I was going to make a video on it, but I just didn't really have enough to put together to really cover. But the idea is there. We did have a hike by the RBNZ yesterday. Well, what was the market you wanted? New Zealand CAD. Yeah, so as we can see, New Zealand dollar is doing very well. But on fundamentals, there isn't really much there. So, pound New Zealand, again, is getting that bearish reading. So I think when it comes to the New Zealand dollar on a fundamental level, it's not really that supported, but I think there is more of a relative strength idea here where we could trade the slightly stronger New Zealand dollar versus weaker currencies like, yes, the Canadian dollar. And we obviously have oil coming lower as well today. So what we're seeing on the H4 is a little bit of a cross on the moving averages, indicating we might be starting a bit of an uptrend here. So fib from the low to wherever the high might be. In this case, I think it could be at these highs. So the previous highs over here on the left, we could sort of come up here, sort of, double, triple top, pull back into the fib, moving averages of established a bullish trend, and then a continuation. Something along these lines would make sense to me. But again, for me to actually get into a position like this, I need to see something on the edge finder to flip. At the moment, we don't have that. AUD CAD. I think the Australian dollar is actually decent at the moment. I don't think it's a phenomenal opportunity. I've sat here the whole segment saying I don't like it, or I don't really have anything. The problem is, because I don't like to sit here and try and force ideas or give you really loose information. If I don't have anything, I will sit here and tell you I don't have anything. And that's kind of where I'm at right now. There is really nothing I'm seeing in the markets because I like to try my best to always give you my honest opinions. They might be wrong, they might be right. But in this case, again, I don't have anything in terms of fundamentals or central banks or really anything to give you to benefit the trade idea. But in terms of the Aussie CAD specifically, I think, I don't know, let's actually just see what the edge finder thinks. I really don't really have anything here at all. So it's got a score of what? This is exactly what I'm saying. There is nothing. So technical signal bullish, retail sentiment is bearish. So we're getting the bullish reading. Economic growth, jobs market's bearish, but inflation's bullish. Yeah, there's just too many mixed signals, really. So on a technical side, again, nothing. We're just sideways. Just a horrible range on an H4 time frame. There is no directional moves. We've got no fundamentals or no fundamental drivers to warrant either sort of directional trend. So unfortunately, I'm going to have to repeat myself that I don't have anything for this market. I do apologize. I really don't like to sit here and say that I don't have anything. That, you know, it's just as boring for me to say as it is for you to listen, I'm sure. But again, I don't want to sit here and lie to you or try and make it entertaining by giving you fake information. Hey, James, any thoughts on Euro CAD? I think actually the Euro could see a little bit of a benefit if we are going to see a weaker dollar. And what was it? Euro CAD. So yeah, maybe I would default, I think, to a long bias on Euro CAD, if I can find it here. Yeah, so we are seeing a little bit of upside, bounces off the 200. I think this is maybe one that I could justify slightly more than the previous markets we were looking at. So as we know, the euro and the dollar are basically inverse, not quite literally one-to-one, but they pretty much are. We can say that they're pretty much inversely correlated. So if we are going to see the dollar start to weaken on the back of, again, the weaker data we've had and a little bit of the hiking idea gets priced out of the market, we can expect the dollar down, euro catch a little bit of the tailwind to the upside, Canadian dollar weaker on the weaker oil prices as well. So I think on a sort of more momentum technical approach or correlation approach even, there might be a little bit of a drift to the upside that we could catch. Again, sort of also benefiting from this uptrend that we are seeing in the bounce off the 200 moving average. So yeah, I think that's kind of what I would go for. But again, it's a little bit too loose for me to actually do anything with. Same issue here. I don't want to buy the pound. Yeah, it's in a tricky spot really at the moment. My cleanest setup is Euro pound short, Nikkei long. Yeah, again, I like the idea of Nikkei long, but it's just not proved itself to me. When I enter trades, I like to see the kick. You know, I like to see it essentially prove itself to that it's going to work, and it's just not really done that. So my entry was basically just off this 200 moving average. Right? It was very, very simple and straightforward, basically following the same pattern we've seen previously. It fell off a cliff. Oh, well, maybe that's not the right word, but it really didn't do well. And now it's reclaimed a little bit, but we're still rejecting these moving averages, the 50 and the 100. We've not printed highs. We've actually printed a lower low here. So it's just not given me that confidence to hold the trade. So I'm happy to get out. And normally that wouldn't really be the case if, you know, because I follow the edge finder, the fundamentals, central banks. But again, because the Nikkei is not on the edge finder, I have to be a bit more strict and a bit more regimented with how I am managing and keeping trades open and so on. AUD CAD flat. Yep, exactly. Better to not trade when there's no opportunity. Absolutely. Forcing trades never works. It doesn't, no. And the problem is when you're in environments like this, it's very easy to get bored or to see something move because you've got nothing else going on. You jump in because it's something to do. May as well place the trade, see what happens. And then you lose. And then you do the same thing again, trying to make that money back because it was a silly trade. And then you lose again. And then you end up in a really bad spiral. Yeah, Nikkei's missing off the edge finder. TO says 2. I'm not sure what 2 is for. Maybe a misclick. Okay, let me just quickly check my time slot for today. Okay, so in about 10 minutes, we've got Tiger coming on, so that's fine. What can we look at in the meantime? I don't think, again, there's not really much that's catching my eye. CAD yen, pound yen. Unfortunately, I was looking at pound yen, but I did miss it, sadly, and it's one of the only ones I was willing to buy the pound on. So previous, I was looking at this previous high. You know, we had the yen strength very quickly. Was it last Friday? I think it was last Friday. The yen significantly strengthened, dollar weakened as well. Was it Friday or Thursday? Either way, it doesn't matter too much. I was looking at entering somewhere around this level, and I didn't do it. I was just way too hesitant because I was a little bit cautious that it was an intervention and it would go much lower, which it didn't do. So yeah, hesitation unfortunately kind of got the best of me here. So completely missed the trade. And it's kind of the only thing I was really have in mind. I don't really like Swiss yen, not really interested in CAD yen because I'm not really a big fan of the Canadian dollar either, just as much as I am with the pound. I don't really like China 50 either. It's just not a market I'm very familiar with. So dollar CAD, dollar Swiss might be all I can really focus on at the moment. So with dollar CAD, dollar Swiss, I think we covered it yesterday as well, but I would take more of a mean reversion approach with these as well. So it's not just the edge finders reading bearish on them, but it's also the fact that they did have quite significant rises, especially dollar CAD here. Actually, I've just noticed we're in a really nice, actually, it's not really perfect, is it? But we've got this kind of level here on the daily. Again, not perfect by any means, but it's something we could pay attention to. And we are starting to see sort of a topping pattern, failure to break higher, momentum starting to slow a little bit. RSI was overbought. So I think, yeah, it's unfortunately counter trend, which I don't really like. It gives me a bit of the heebie-jeebies trading against the trend, but I wouldn't mind, yeah, something maybe similar to this, take it back down, or at least look to take it back down to the lows. And again, the edge finder is bearish, so I don't mind this. It might be the only thing I actually can pay attention to at the moment. I'm going to add this to my watch list because, again, don't really have much else to pay attention to. NZD USD. So, where is it here? I would also expect upside. It's a good thing I didn't take the short position. That could have been a bit dreadful. So, yeah, I would expect upside on the New Zealand US dollar. I think the likely situation here is a rejection off this 200 moving average, a minor pullback, and then sort of a break higher. Maybe not literally to these levels, take the arrow as just visualization, not literal. But yeah, I think the New Zealand dollar is doing quite well. Again, we did have the rate hike by the RBNZ yesterday. I don't think the fundamentals for the New Zealand are necessarily bad. Not strong by any means, but definitely not too bad. And again, I'm not overly optimistic on the US dollar at the minute either. So I think maybe trying to catch some sort of pullback would be decent. Again, unfortunately, it is counter trend. And this is one of the problems I'm facing. Even if there is some good ideas like New Zealand US dollar or US dollar Canadian dollar, they're not really meeting my criteria to actually get in on technical side, even though the fundamentals might be leaning towards that direction. Does that make sense? James, we were watching DAX earlier this week, but this escalation happened. Now it's missing from the EF again. I know, unfortunate, isn't it? So where's the DAX? Yeah, so we did quite well on the DAX. We caught this move here and we managed to get out really well. Actually, it was a very, in hindsight, a very clean trade. Now, on a technical front, I really like the idea of being a buyer here. I think this looks, super, super clean. But the problem is, again, as Sluggy said, it's not on the edge finder. But this will be more of a momentum, just trend following attempt, bounce up to 200, RSI is oversold, expecting a continuation to the upside, following the trend. Simple approach, but not really backed by too much. ECB pricing another hike. Yeah, we'll see about that. BOJ targeting 163 on UJ to intervene. How do you know that? Although, yeah, dollar yen is looking a little bit precarious at these levels here. Yeah, I don't know. It is quite tempting to go for a short position and just maybe a stop loss at 163.5. Looking for an intervention, but I just don't want to do it. I attempted it back at 160. It didn't work out. Do I want to attempt again? Maybe. I can't really justify taking a reckless trade, or I don't want to call it reckless because it's not really reckless, but I don't want to expose myself to a more 50-50 sided trade because this week hasn't been great. I don't really have the budget for it. Last week was fantastic and I could have done it. But again, this week hasn't been very great, lost on the Nikkei. Gold hasn't played out. So I just don't have the extra wiggle room in terms of P&L to really warrant taking a little bit more of a risky position. So I think I'll stay away. But again, I understand the thesis or the idea behind maybe going short dollar yen and trying to catch something there. The dollar B, how it is right now is just off-putting for US dollar pairs. Yes, I completely agree. Oh, reading on Investing Live. Oh, interesting. Okay. Fair enough then. Yeah, I like Investing Live. I follow them. Pretty good news source. Okay, right. Let's see what else we've got before we wrap up. I've got about 5 minutes left. So the Swiss franc is getting a bullish reading, which actually I didn't notice earlier. It could be quite nice for our dollar Swiss short position. We've got a little bit of extra confirmation with the Swiss individually getting that bullish reading. So maybe dollar Swiss is a good play. Let's have a look. I think, I don't know, actually. Higher time frame, it is bearish, which is nice to see, but I think I would really just need it to reach this resistance level. Although, actually, hold on. I suppose what I've just noticed is we are at a pretty nice key level or round number level at 0.81. So that could just be more of a less of a technical or resistance type play, more of just a round number psychological type of play. So maybe an idea with pending order. This isn't financial advice, by the way. I'm thinking out loud. Pending order at 0.81. Stop loss just above this high, so maybe just above this previous H4 high at 0.821. And then take profit wise is tricky. Maybe even no take profit, because the beautiful thing is with the Swiss pairs is they just have this natural drift to the downside. So if you can get a good entry, theoretically you could sit in it forever. The downside with a lot of Swiss pairs though is the swaps. So going short on like pound Swiss, euro Swiss is very expensive. So obviously keep that in mind if you are going to go short. But overall, I don't mind it. Might look for New Zealand pair next week. Yeah, I think that's what I'm going to have to do. I might have to just call it a week early. Wait for the weekend to pass and then come back next week with hopefully some new some new ideas. Do you trade prop firm accounts on daily chart? No, I don't trade prop firms. I do trade the daily chart, but not very often. It's only in sort of rare situations. So my default execution time frame and analysis time frame is the H4. The daily is fine. There's no problem with it. It's just a bit slower. So, whereas, if I trade the H4, I can normally be in and out of a trade within maybe a week, maybe even less sometimes, depending on exactly what's going on. Whereas the daily time frame, I've often found myself in positions for much longer than I really want to. So I would really just decide, what's best for you. So for example, if you're in a positive swap trade, the daily time frame might be better because then you can sit in it for longer and you can benefit from those swaps. Whereas the H4, again, you can be sort of in and out a bit quicker. But it's all really down to however you trade. You'd need to find that within your back test and your strategy. Okay, right. So let's do a quick final review. So yeah, gold, I'm fully expecting to get stopped at break even here. I really don't have any expectations for gold, unfortunately. Oil is continuing to move lower. Risk markets like the S&P starting to climb higher a little bit. Nothing really that interesting. The Russell's doing pretty well, actually. Nice recovery in the Russell. The Nasdaq seems to be a little bit trapped. Nikkei, I don't like the Nikkei. I like the Nikkei, but I don't like it right here. I need to really see it reestablish a clean trend. So break of this level, continuation higher, and maybe something like this, enter on this retest. I think that would be really all I can do in this market. For now, I'm sat sideways, it's sat sideways. The DAX, I don't mind, but again, it would be more just a technical momentum type of trade like many of the others we've discussed today, because the fundamentals really aren't giving me much to work with or to talk about. Excuse me. On the metal side, I've got nothing. So completely neutral, gold, silver, copper, so on and so on. Euro Swiss, I'm still long. Euro pound. Yeah, I'm not really that interested in Euro pound at the moment either. Is CAD still looking bullish? Let's take a quick look before I'll head off and let Tiger take over the show. Where is CAD here? Any advice on trading small personal account? Not a big fan of prop firms. Deposit. As long as you have got a strategy that works, just keep depositing. Let compound and deposits do all of the hard work and heavy lifting. because the problem is when you're trading, let's say a $500 account for a year, and you might grow it to $600, $700, $800. It's still a couple of $100. It's just not, I'm speaking generally, of course, depends where you live and your financial situation, but generally speaking, that's just not much money. It's very easy to trade a $500 account for, a year, 2 years, and it grows by great percentage, but dollar-wise, it's still nothing really. And then you get frustrated, you give up, you gamble, or just quit. So the problem is, or the key thing is just to keep depositing, patience, and let trading do the job. So yeah, Canadian dollar 85.7, which actually is slightly better than I thought. But the problem I've got with Canada is very similar to the UK. It's not necessarily just the fundamental data. It's about the how do I explain it? It's more about the socio-economic side, if that's the right word. So it's more about the cost of living, energy prices, government problems, so on and so on. It's problems that aren't really surfacing on the fundamental data yet, and that's kind of what I'm waiting for. I'm waiting for things to really get worse, and then for example, in the UK, I'm waiting for growth to slow down. I'm waiting for unemployment to continue to tick up, because it will. I guarantee it will. It might take a couple of months, it might even take a couple of years, but it will happen. So I'm waiting for these things to start kicking up a notch, and then I will be executing pretty heavy on those ideas. But for now, I can't do anything. Anyway, ladies and gentlemen, I've got to head off now. It's the end of my slot. So we have Tiger coming to take over the show. Guys, stay safe. I'll see you all tomorrow. Thank you for being here. Don't go anywhere. Got Tiger coming to take over the show. Don't get margin call. See you later.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Thursday. Hope you're all doing well. Got a late start today. My alarm this morning went off. I normally snooze a couple times, but I turned it off, so I actually got up late. Just barely made it to my other project on time, but hey, I'm human. I'm human. Ladies and gentlemen, let me know what you're looking at. If you have any specific tickers in mind, keep in mind Nick's code there, A1 Live, for 35% off on the account of your choice for Ola Prime. And yeah, as always, holler at us if you have any questions on it, especially me. I used to do the rules, used to work the rules on the Discord, kind of helping people navigate the rules section back in the day. Used to do some content creation with them as well, live streaming, the whole bit. So great company to work with. So yeah, definitely give it a look if you guys are interested. He's also got his QR code there for you as well. Just kind of a quick look at the last 24 hours or so, guys. Obviously, yesterday we had the Trump rhetoric coming out about ending the ceasefire. We did have some strikes happen as a result. Let me see here. Small number of military strikes in Tehran and Western Iran. Had some reports of explosions near military installations and research facilities. Iranian state media claims most projectiles were intercepted with minimal damage and few casualties reported so far. So that's what they say. I'm sure the U.S. says something greater than that. So you guys know at this point, the truth is likely somewhere in the middle on that. But outside of that, VIX obviously had a 20% spike yesterday after those comments, only to retrace a lot of that fear towards the end of the intraday session anyway. FOMC minutes, obviously hawkish tilt overall. Nothing really too different that I'd noticed or that I saw compared to Kevin Warsh's speech 3 weeks ago. Dollar holds some strength. Oil spiked, then pulled back, kind of like the VIX, as those de-escalation hopes kind of lingered on. Again, pretty resilient market overall, despite all the craziness. And if you think about it, no matter what period of history we're in or years, there's always a conflict going on somewhere in the world, right? So it seems like the resilience is partly because of that. Now, we don't normally have big major wars going on like this, two of them at the same time. Talking about Russia, Ukraine, obviously the Iran, Hezbollah, Israel, U.S. situation. But there's always a conflict somewhere throughout the world. So I think for the most part, markets are just kind of digesting it and like, yeah, whatever. So the resilience remains despite all that. We did have some gap downs on the indices yesterday, only to retrace quite a bit of it. And in fact, I think one of them ended up on the positive side whenever the day was finished. So there you go. Pretty much where we started yesterday in a lot of ways when we're just looking at price action on these charts. So again, the VIX with that big giant spike got all the way to the 1890s, all the way back to 16.5. So anytime, and I think Chris mentioned this yesterday, but anything that's under 20 is pretty well manageable. Anytime you get over 20, that's where a lot of the volatility creeps in, causes things to go haywire. And if you're an options trader like him, yeah, he likes that. He likes that. So, but anyway, yeah, things kind of cooled back down after that. And then, of course, when you scale out on the VIX, I mean, this thing's just way down from the peak of the war, which was up in the 36 area. So pretty silent overall. You can even trend the VIX, guys. High point, lower high, pretty well even on the bottom side at the 15s. So the fear and greed gauge looks like the fear has subsided since all that took place. So oh, my cat's yelling. I normally have my door shut, but my sister's gone. She's been hanging out here. Took her to the airport yesterday to go to Vegas. So I left the door open, and her cat, Rona, which, by the way, was named Rona Gatto. He was born during COVID. So that's the name that her son gave him, Rona Gatto. So we call him Rona for short, but he's screaming at me right now. I should have shut the door. Anyway, as far as the Dixie, the dollar index, still giving the series of higher highs, higher lows, a little bit deeper of a pullback. Obviously, that services PMI the other day kind of aided part of that, but it is sitting currently at about 101 at the moment. James went over it earlier, dollar CAD. So we got dollar CAD, dollar Swiss on the list for bearish items. But guys, I just don't think the trend is our friend right now. And I think he kind of touched on that. I totally agree, because if we go look at dollar CAD, dollar Swiss, I'm on the wrong watch list, dollar CAD, dollar Swiss, we'd basically be having to fight the trend. If I'm going to fight the trend on any one of these, dollar CAD or dollar Swiss, I personally think it would be dollar CAD. So I kind of echo part of what he said. But the reason, and we all have our different reasons, right? So my reason is the fact that we've bounced into this daily supply zone, and we've been kind of chugging along for a couple weeks up here. So is that going to at some point help slingshot us down? We're talking about this zone, guys, that was created back, based out on April 8th. We had a leg up, you had a couple basing candles, and then a 3-candle drop. Some candlestick pattern traders have a nickname for it. I don't remember what they call it, shadow or something like that. But anyway, you had some pretty good volume coming out of this. So as far as buying the dollar CAD, if we had a bullish bias, absolutely not, because we're in that. But it's given us a bearish bias in an uptrend. So if I were to take a chance or a gamble or throw some money down, throw some risk down on one of these, it would probably be this, just because perhaps that daily can help kind of slingshot price back to the downside. And then really it's all about the series of lows and highs. So we did have a high point here. You can call that an equal high or a double top. Then you had a lower high. And at the same time, you had a series of lows here. You had a lower low here that broke this structure. And pretty much a double bottom kind of working as we speak. So I think for me, guys, aided a lot by the fact we're in that supply. I think I would want to at least see a break of this most recent structure, and then maybe a retracement back up to a supply zone. So break and close, and then maybe we could pull back into a newly created supply zone somewhere that hasn't happened yet. As always, guys, not financial advice, just showing you what I'm keeping an eye on. If we can maybe have a candle like this turn into a supply zone, that might possibly be a play. That's the only dollar-based asset I'm currently interested in. We've already broken the one structure, but is one a fluke? I don't know. I'd rather see a second structure broken, a lower low broken, because we already got the lower high. In fact, we've got a lower low and a lower high, but I just want to see it one more time, guys. I want to see it prove itself, mainly because of how strong the daily uptrend is. Does that make sense? We don't want to catch falling knives in general around here, get our hands cut off. The reverse of that is we don't want to stop a rocket ship. It's going to be hard to do. But again, because that's the bearish bias that we're getting based off the fundamentals, the sentiment combination, all that, I would have to see that happen, this picture happen just like this, before I have any interest in getting into it. If we were already in a downtrend, then this one broken structure would probably be enough. But because we're in a strong uptrend, I need to see multiple structures broken. Yeah, because that turns this basically into an impulse leg. This whole series, a bearish impulse leg, or a change of character, right? Basically, this is a change of character here, because we had a series of higher highs and higher lows. Change of character is when you break structures to the opposite side. Again, I just call it all break a structure, just to keep it all simple, but it's technically a change of character. So that's the picture I personally want to see on dollar CAD. And again, that's the only dollar-based asset I'm currently interested in. I'm not interested in the dollar Swiss at the moment. I'd be dollar CAD. The Canada dollar is part of the reason also, because the Canada dollar stands alone at the top as far as the strongest fundamental currency when we're looking at high impact economic calendar events. So let me see what you guys got over here. Gold. Yeah, of course. You beat me to it, Cooper. I'll definitely get on some gold. COT data, says Hikanaro. Yeah, we got that on Tuesday rather than Monday. They lied to us. So we actually got the COT on Tuesday, I think, is when the updated numbers came in. So yeah, let's touch on that right after we touch on gold, because I know a lot of y'all are itching for some gold. Everybody's itching for gold, so we'll go take a look over here. Gold and silver, obviously neutral. However, I do believe gold is pretty close to a bullish signal at this point, is it not? Did I not see +4 earlier? Oh, it's +2. Okay, so I must have seen something else. What was I looking at earlier? Oh, pound dollar is what I was looking at. Yeah, somebody asked me about pound dollar on one of my other lives I did earlier this morning. So we'll look at that too, since it is pretty close to bullish. But as far as gold goes, still a little bearish on the fundamentals. Remember, the dollar is still giving us a 60% beat rate. So it's that 60 threshold I told you guys I personally look at. Just barely tall enough to ride the roller coaster. So it's just barely still giving us some fundamental strength, talking about the dollar. We had those two missed labor data sets. We had the two PMI data misses. And even though it's more of a medium impact, today we had a missed home sales number, existing home sales number right here. Okay. So again, this, or actually lighter impact, depends on the calendar. Some calendars have this as a medium impact. Some have it as a light impact, like a Forex Factory does here. But that's a 100,000 miss right there. If I'm getting my math right, 4.09 million, 4.19 million, yeah, 100,000. Projected it remain the same, but they missed by 100,000. That's existing home sales. So not a great look, but again, it's more of a lighter impact. So I'm personally just kind of thinking about that one, even though it is lighter impact. But anyway, just going back over here. So when it comes to gold, it's the opposite, right? We just talked the dollar's bullish, barely. Well, that just means the gold is just bearish, barely. But the sentiment side of things, which you asked about the COT report. So let's go have a look at that. And then we'll kind of join these two in to one topic. The sentiment's actually turned around bullish. So let's go have a look at the COT report, since we did get that updated version. Now, this is a combination of the COT report and the retail sentiment, things of that nature. But there you go. Gold got a 0.7% hike. In other words, the large institutions of the world, the big banks, the hedge funds, the investment banks, financial institutions, the pension funds, all those people increased by 0.7%. So they added 12,500 longs and they got rid of 89, a very tiny number. This is pretty well negligible as far as I'm concerned. got rid of 89 shorts. So that in itself is a very, very minuscule bullish result. This is obviously a bullish result. It's net long 86.5%. So just the COT report alone, it's, you know, a slightly bullish tilt. Now, I've told you guys before, me personally, I really I don't really pay as much attention to anything that's minus 2% to positive 2%. I just think it's a little on the minuscule side. Silver, though, is 2.84%. So that's a little more my speed right there on the bullish side. And that's the only major difference or major change in my opinion. But then again, you go to the bearish side, okay? The Rand, the Nikkei got a 5% bearish look or bearish tilt from week to week. Euro was the biggest loser as far as currencies go. And then you had the Aussie Kiwi combination right there at about 1.5 to 2% down as well. So, yeah, I'd still pay attention a little bit to that. But it's really, for me, it's all about, as far as currencies go, there's the Euro. That was the biggest loser, plus the Nikkei. So anyway, as far as gold, though, gold, silver, again, silver had the 2.8%. Gold had that minuscule 0.7%. So that is partly why. That's partly why gold's given us that +2 on the sentiment side of things. And what about, oops, I didn't mean to do that. What about the put to call ratio, guys? What's put to call telling us as far as gold? Come on, gold. Come on, come on. We getting anything major over here? Gold's floating towards high put volume, which means a lot of bearish bets out there in the retail sector for the options traders out there, the retail options traders. Still pretty well neutral, but you can see we went from high call volume. Now we're getting closer to the high put volume. So that could potentially offer us a little bit of a bullish signal, a bullish contrarian signal. Nick also has this new net options flow tool, guys, which I still think is just awesome. And as far as gold goes, you can see we went from a very bearish options flow to now we're on the bullish side. So that in itself could be construed as a little bit of a bullish contrarian type signal, especially since it's retreating. We got very bullish on the option side, and now it's retreating. So are we going to get kind of a repeat to where they're going to go back bearish while we're maybe looking to go bullish? Possible. Pretty cool tool he's got there. And then lastly, I just want to take a quick look at the retail sentiment side of things. Gold is net short. This is the average retail trader at home on their smartphone, their laptop, their computer. 77% are short to only 22.5% long. They're bearish. Perhaps we could look at it as a bullish contrarian signal. Okay, so that's partly why we're getting a +2 on gold for sentiment. And then, of course, technicals. Let's go look at the chart because it's telling us a +2. So it's looking basically at a moving average crossover combination. Plus, I do believe is this the month where sentiment or where seasonality might be, you know, giving us a little bit of a bullish tilt. Let's go have a look at gold over here. Gold. +2. Need to go down here to gold. Yeah, seasonality is bullish for the month of July on average for the last 10 years. Okay, so that's a odds enhancer all in its own. So I just wanted to break that down as far as the scoring of gold. And of course, it's dynamic. This could all change in the next couple of days, but that's where we sit as we stand. After a big downtrend, of course, Nick and all of us have been talking about bearish gold this, bearish gold that, but then the fundamentals kind of shift to where you're starting to get a few bullish gold concepts creeping in. Obviously, the opposite side of the misses that we had on the dollar for the PMI data, those two data sets as well. I think it was ADP and also the non-farm payroll result. So it just kind of changed things around. I probably should delete it. I still have an alert up here at 4180, but we just saw it's a +2. So if anything, it looks like it's trying to creep around to the positive side. We go from -7 or 8 or whatever it was early last week to now we're +2. Even though it's neutral, that's quite the bullish swing. So I'm remaining sitting on my hands right now. But if you're just looking at the technicals, well, we're kind of in no man's land because we bounced into this supply zone confluence I've been talking about the last couple weeks or so. We have a demand zone down here, which I was originally going to utilize as a take profit. That's why I put that white arrow there. So I feel like we're in no man's land on gold. Technicals are already giving us a bullish look. If we can get any more bearish US data, then this could possibly give us a little bit more of a bullish tilt, especially if we can break the rest of this structure. I personally wouldn't want to get involved in gold unless we break the rest of this supply zone and close, and then look for a retracement to a demand. See, everything's flipped. Everything is totally flipped from literally the start of last week when we were looking bearish. Now we're trying to look at some bullish themes, but we still have to get some help from the fundamentals because the sentiment and the technicals are already looking good. And for me, as a technical, looking at the technicals, I just personally want to see a break and close above the zones first before getting a retracement. What U.S. data do we have coming up? It's pretty slim pickings this week. Obviously, the week after the holiday that we just had. Let me get rid of all the yellow folder. And we're not going to get a whole lot of anything this week. Nothing remaining as far as medium or high impact events. So may have to start looking into next week where we do have our inflation numbers coming out on Tuesday. Hey, we got the core and the headline CPI numbers for month over month, year over year. The most recent numbers for those were bullish for the US dollar. So if they go bearish, if they miss, then that'll go a long ways to helping the prospects of looking for that bullish look on gold. For me, again, I want to break that supply zone confluence and close and retrace. But if we get a bearish CPI number come out for the dollar, that'll help. And then the next day we have our PPI numbers coming out. So if we happen to get bearish numbers over there, what was our most recent PPI numbers for the US dollar? PPI. Okay, bullish. So if we get bearish PPI results and inflation results next week, then I think that could help us get a little bit more of a bullish look on gold. Okay. And now we have geopolitics to think about because that likes to throw a wrench in everything. I'm just going by the hard data. So that's what I'm looking at. I don't really see a possibility of me entering any gold trade today or tomorrow. Not until I see those sets of data on Tuesday and Wednesday. Does that make sense, guys? Yeah, you're right. You don't really have to be intelligent to trade. You just got to look at a few rules, right? An airplane pilot, what do? Airplane pilots make some of the best traders. You know why that is? Because all they do all day long is follow a checklist. They have to go through item by item and check yes, check no on everything before they fly. That's literally all trading is. Figure out your personal algorithm, your personal checklist. Make sure it's a decent strategy that works. And then just go down the list every day. Check yes, check no. That's what I do with my trading trade plan over here. Fundamentals. Okay. What's my world news? What's my geopolitics looking like? Where is the world freaking out and probably putting money based off of headlines like these over here? Okay. Check. Fundamentals. What's the economic calendar report telling me? Okay. Check that out and then look and get confirmation with the smart and dumb money conversation over here. Is the smart money in favor of the positive fundamentals, the positive world events? Great. Is the retail trader, since they tend to always want to catch falling knives or stop rocket ships, are they opposite? Great. Those are all good. Okay, great. Now I've got permission to look at a chart. Right? That's only after those items line up, guys. Like I tell you, I'll go weeks at a time without looking at half these currency pairs just because I don't have a fundamental why nor a sentiment confirmation, a smart, dumb money confirmation. So, yeah, sometimes you guys see me pop on an old chart and I got all kinds of old drawings I got to delete. That's why. I've got no reason to look at it unless I have a fundamental sentiment reason to look at it. So, anyway, just to finish up on gold, yeah, that's basically what I'm looking at. It's trying to tilt bullish, but I just want to see the rest of this data come out next week, the CPI and the PPI, and obviously if we get neutral or bullish readings on these, then that's not going to help the gold situation with the way I look at the markets. Okay, so hope that helps. Hope that makes sense on the gold front. Now, silver, since we're already talking metals, is, where's silver at? It's a -1, so it's neutral as well. But a little bit of mixed feelings between gold and silver. I like to see them both on the same side. In other words, if gold is given a bullish signal, I want to see silver there too. It's just a little bit of that confirmation, confidence, I should say. Okay, just another odds enhancer. It's not necessarily the end all or be all. It's just not. It's a nice to have. Silver's given a very similar picture, although it's again -1 right now. So we could go either way. We could go either way with this. It's a very similar zone setup. If we get any more bearishness towards silver, then I've got a supply zone confluence waiting for it just a little higher up here. So sitting on my hands with those. Hope that helps. Tesla. Oh boy. I haven't looked at Tesla in a while. I know this is an FX channel, but maybe we'll take a quick peek at that. How do you manage from being stopped early by big spreads while trading minor pairs, especially during market rollover times? I just avoid trading during that time. I mean, if I'm in a trade on a minor pair, yeah, like you said, if it's a bigger spread, then if you're really that happy with the trade setup and you already know the spreads are going to widen and possibly take you out, close the trade early and just re-enter it. The rollover usually takes, I don't know, half an hour to 45 minutes, sometimes an hour between the spreads kind of come back to normal. The last thing you want is a 30 pip spread on a pound Swiss or something crazy like that. Take out your stop loss and then, give you a needless loss. So I usually avoid, if I'm in a trade and it's right around break even, I know I got a stop loss not too far. It just depends. But if I don't feel like 100%, like if it's not a grade A setup, if it's like a grade B, something that maybe one or two of my rules didn't quite go in sync, I just get the hell out of the trade. And if I really like it, I'll just re-enter it after the volatility and the volume kind of go back to normal and continue from there. But that's just the way I do it. Okay. So, yeah. You mentioned Tesla. We'll take a quick look at it. We'll just look at it quickly on the technical side. Okay, so just real quick, bunch of congestion like crazy. We got the 8 and the 21 EMA. Looks like the 8 is just barely peaking below the 21. So if I'm just looking at some mechanical trend help, that's barely bearish. But this is just one big equilibrium as far as I'm concerned. A lot of congestion. I trade extremes. So if I'm trying to trade Tesla, I'm waiting for a retracement maybe to the top of this area here. But by the time that happens, the moving average kind of flip over. Yeah, I don't know. Here's what I would say, and then I'll stop on this. I would want to see a break of this structure right here on the daily, and then a retracement back for a supply zone if I'm trying to short. And obviously, it'd be a little bit more the opposite if I'm trying to buy. Tesla, if you guys don't know, we do have, Trader Nick does have the, let's see here, the stock box. So for you stock traders out there, you can go on here and type in, and he's got well over 100 tickers on here, but you can go find the same scoring system we have on Edge Finder. You can find it over here for stocks. So basically Tesla is given a straight up 0. Okay. That's as neutral gets. You got a bunch of red, you got a bunch of green. He's looking at the financial readings, the sentiment, technical readings as well. So the first two is basically like the Edge Finder. But then where we have the economic calendar items on the Edge Finder over here, it's more the financial readings, earnings per share, revenue growth, okay, price to sales, forward priced earnings, all that fun stuff. So, and that doesn't really get mentioned on this channel a lot, just because this is more laden towards, gold, silver, indices, obviously the FX pairs. But if you guys are a stock trader, definitely encourage you to go check this out. He'll definitely run the similar discounts on this as well. And there you go. There's just tons and tons of stock tickers for you to choose from. Okay. So enough about that. But yeah, I don't like Tesla unless we start breaking some structures, because we technically have a lower high series, a lower low series. It's technically in a downtrend. It's just too congested of a one. It's not a very clean one, if that makes sense. And while we're over here, what's SpaceX doing? What the hell is this thing doing? You had the liftoff, you had the plummet, and now it's just basically around break even, or where it started, 150s. So thought that would be interesting, since we're on the stock side of things for a second, just to point that out. Happens a lot on IPOs, guys, although most IPOs, they don't even get this far. A lot of them just kind of initially plummet down into the bearish territory and take several weeks, several months, a couple years before they even get back to break even and start going back into positive territory. So even though all this hype around the largest company, the largest IPO in the world happened, you see what happens. These IPOs, they're just not very reliable to buy on the initial wave. And of course, you got the shareholders after their waits, their holding times that they have to observe. A lot of them probably started cashing out, taking their money. So there you go. Just a little bit of IPO thoughts there. Let's get back over here to currencies. And I do have, okay, perfect. I got about 12, 14 minutes. Let me see. What else you guys got? Oil? Tan, you want to look at oil? Real quick, though, Mr. Shakey's gold starting at trend line on the up, though, on H4. Let's see what you're referring to. I see a downtrend. Are you on a smaller time frame? Yeah, when in doubt, zoom out. Oh, you said 4 hours. Yeah. Yeah. On the up, though. Yeah, you say on the up. If you're referring to something like this is just too small of a time frame, right? I don't know if this is what you're talking about or not. Swing low, higher low, right? Which, yeah, when you go to smaller time frames, it's going to look like an uptrend. There's a 1 hour. Looks like an uptrend. Okay, big pullback. But I start everything from a daily. And on a daily, that's still clearly down. This recent up move we had going into the holiday weekend last week, all it did is bounced right into a supply zone, and that's where we started having fits. So when in doubt, zoom out. That's the way I look at the trend. I wouldn't be looking at it down on a 1 hour, because remember, the higher the time frame, the more accurate it is. Okay, the higher probability that that's going to continue. Talking about the trend in this case. Daily is way stronger than a 4 hour. 4 hour is way stronger than a 1 hour. Okay, 1 hour is stronger than a 15. It just continues. So yeah, just be careful about where you're putting up trend lines. And and obviously, yeah, when you scroll all the way out, start looking at this thing on a weekly, on a monthly. Yeah, we're still up. Just big pullbacks, right? So it's all about the context. All about the context. I just so happen to be looking at the daily right now. Okay, you asked about oil. So let's go to oil. Now, oil for a brief moment was on the list the other day, only to fall right back off. Okay, so as far as oil, let's just go pull it up over here. U.S. oil on the asset scorecard. Another one of the newer features on the Edge Finder, guys. Really awesome. The reason the asset scorecard is so awesome is because we can see the recent scoring history on here as well. So there you go. It was bullish towards at the end of June, just for a few days there, but now it's back to neutral. So currently at a -3. Sentiment, the fundamentals are giving a good vibe, but looks like the technicals have flipped around according to the algorithm. So as far as oil on the chart over here, go pull it up on a daily. Okay, we obviously had that big decline since the market started shrugging off the war, and obviously the memorandum of understanding and all this, all that. We kind of started declining because it was more of a risk on feel on oil. And then we got close to and flirted with the pre-war daily demand after closing the gap. We didn't quite touch it. Again, Brent did. WTI didn't. But then, yeah, the last a couple days, that's where we had, or I should say, that would have been Tuesday and Wednesday. That's where things started flaring up again. Okay. So it started flaring up with the fights, the missiles that we talked about. And what happened? Well, we bounced right into a supply. I told you guys about this supply over here that I was concerned with to see if we could kind of bust through it. You had a base, you had a leg out, you had a little bit of a gap, you had VSA candles, my volume spread, the tick volume, guys, kind of crept up. So not to say that's a very strong zone at all. Like, I had no interest in shorting it. Maybe I did for just a minute, but that quickly dissipated when I saw the fact that the leg out didn't really even break this structure right here until a few days later, right? But it's still one to be aware of. And it just so happened it caught a little bit of unfilled orders and started giving it fits. So what did I do after that? I drew up another demand down here, I believe on a 2-hour. So it's getting crushed up. It's kind of getting scrunched up, if you will. Now, if this breaks the rest of the zone, the rest of the supply closes up here, okay, that would go a long ways into saying, hey, maybe this geopolitical situation might cause oil to spike again. But again, it's a resilient market. So it's already kind of eaten up a lot of these gains that we had yesterday. Okay, here, this is the 4 o'clock a.m. Eastern time candle, or 2-hour candle, I should say. Let's go to a 1-hour. Yeah, 4 o'clock a.m. Eastern. That's kind of where the rhetoric started popping in for President Trump, saying, hey, the war is, or the MOU, the ceasefire is pretty well dead, after the reporter asked him that. And then, just like a lot of these other markets, it pretty much took away that risk off push that we had back to where we started. But it just so happened that created a zone of demand, because we can see the VSA pick up, all the volume kicking in on that leg out candle, this red candle down here. So since that happened, since that occurred, well, now I want to be aware of that. Because if I'm trying to short it, if I'm trying to short from that supply, even though, again, I don't think it's the strongest, well, now I need to see it break this demand. So these demand zones and these supply zones, they get created quite a bit based off of geopolitics, based off the data. If I'm short biased, I'd need to see a break and close below that. But right now, again, it's just kind of in this congestion area. There's nothing I can do. Nothing I can do. And then, not to mention, the edge finder is giving us a neutral signal, -3. So if anything, it's close to bearish. And the geopolitical tracker that we have, that Nick has, is still going to say high risk. But to be fair to the market, it's been high risk for quite a while. And what have we seen the Dow doing? What have we seen oil doing, right? The Dow's been flying up. S&P, Nasdaq, up, but just kind of stabilized since we had that sector rotation. The old money kept going, the Dow. And then oil's been dropping like crazy. So I don't even know, if we happen to get a bearish vibe, a bearish bias, a -5, -6, hey, the market's already content. The market's already persistent. It's resilient. Might be looking for short. But again, I don't want to short unless we break and close below the structure right here. Because on a higher time frame, this is nothing more than just a little bit of a pullback. Okay, so just need to see a little more work done on oil before I have any interest in playing with it. Moving averages still pointing down, obviously, as well. And also, we have not touched on WTI. We have yet to touch the daily demand. So even if I get in a trade anywhere in this area, I'm going to have to be aware of the daily demand that's just below the waterline here. Okay, so if I'm in a short, well, I might consider locking up some gains by the time we reach the zone, because the last thing I want, if I'm short in this market, is for this demand zone to catch a bid and take away all my unrealized gains. So just one big puzzle, guys. But one thing at a time. Break that structure. Break and close below the structure. Got to have Edge Finder on our site as well. And again, that data that we get next week for the U.S. data on Tuesday and Wednesday could help us out with this. So as of right now, sitting on my hands on oil. Hope that makes sense. Yeah, oil. Okay, yeah, good deal. And as far as just going back to the top setups, do have some pairs. Pound yen was one that I was keeping an eye on as well. Let's go look at, and that's +8. Here, let's go back to get rid of the neutral stuff. Just stick with the actionable pairs here. CAD yen. CAD is obviously a very strong currency, but so is the yen. Okay, remember, the yen is third place right now. It's still up there. Oh, in fact, most of the currencies are strong. If we go back real quick over here to the surprise index, guys, look at that. All of them are 60% or higher beat rate. The only thing lacking is the Aussie dollar, remember. So with any combination of these currencies outside of the Aussie, we're going to have to buy a strong currency and sell a strong currency. Okay? So that's just something to keep in mind. That's just something I keep in mind from a fundamental perspective, since the fundamentals are the why. So anyway, CAD yen, pound yen, let's go have a look at those. CAD yen obviously being the strongest signal, strongest bullish signal. And from a daily time frame, the alligator is closing his mouth to the upside. Okay, we had a big downtrend. Alligator starting to close his mouth, talking about the 8 EMA, closing in on the 21 EMA. I would highly prefer that it closes above it at least before I look for a retracement for a buy out of a demand. I've got a very aggressive zone of demand up here on the left. Go back to a one chart view for you on a 30-minute. I think this is quite an aggressive look, but there's no denying we had some volume picking up down here. So I do like that. So this is a possible partial position for me. Definitely not a full port, definitely not a full risk. And then down here, I think it's probably a little bit closer to a full risk. But I really, like I said, I really want to see price close to where the daily 8 closes above the 21, so as far as the EMAs. So that's really my whole thing with that. We're just not quite there yet. But at least we have broken this structure. Change of character, right? Downtrend, downtrend, downtrend. Oh, broke structure here. That's a change of character. Now I just want to see it one more time. 2 structural breaks to the upside, and then we'll talk. We'll talk buys. Pound yen, that was the other one. Let's take a look at that real quick. Go back to the daily. Okay, this is a lot stronger of a trend. Would you guys agree? Relative to CAD yen. So CAD yen. Then we move over to pound yen, and you guys can see all over the world. This is way better. Broken a structure, broken a supply zone on a daily time frame. 8 EMA is pointing up. So is the 21, but the 8's flying up. This trend is much better to look at. Much better continuation. So okay, the trend looks great. Now, what about an actionable time frame over here? Did I have a daily demand? Daily demand down here. There's a daily demand here. So let's draw this one up for you guys. Almost a flip zone. So this right here would be a little bit of a daily demand. Go back to that 4-hour action time frame. What I was looking at on this one, as far as 4-hour zones, remember, I like daily 4-hour confluence. This would, by definition, have to be my 4-hour, but there's a big downfall to this, guys. Talking about this leg out. There's no volume. I got an ugly blue candle down here on my VSA, my volume spread analysis, my tick volume, my institutional type volume. I don't see a lot of accumulation happening on that candle, on this leg out candle from the VSA. I'm just not seeing that. So that's the downfall to that. The effort didn't really match result. But I would probably be willing to overlook that, partially because it did exceed the daily supply. And we had 1, 2, 3, 4, 5 really nice green candles coming out of that. That was a move with a purpose. So even though the leg out volume kind of sucked, to be quite frank with you, at least the candle structure looked good. And then we rebased, and then we got another push up. So what I would like to see is just a simple drop down. And because the effort didn't really match result, again, I would not do a full position, probably just do a partial position. In fact, drop down, we're going to take some liquidity here because we rebased. The buyers won, the bulls won. Demand exceeded supply, so price pushed up, it gapped up. So there's definitely going to be some liquidity under these low points right here, these swing lows, that a bank could utilize those sell orders to fuel their buy orders. And then all I'm asking them to do is just have price drop a little bit lower, into the unfilled orders for a buy position. You get maybe a small base here, consolidation. You start getting your expansion candles, which of course is the master pattern. That's the actionable way to utilize Wyckoff methods, guys. Base, contraction, expansion to take liquidity on both sides, expansion down to take this new liquidity, unfilled orders for a buy. Rewatch that a time or two if that's like a lot of steps. It can be, but it's all about manipulation. It's all about liquidity and harvesting liquidity. That's what banks have to do. Okay, they have to do that. They can't just put in a full order down here and expect all of it to get filled. If they put in a full order down here and they only get a partial fill, well, that could possibly be what happened. So when price comes back, what do they want to do? They want to finish their order. So that's why I love demand zones and supply zones. Even though I'm cutting this one a little break on the leg out because the volume was pretty small. Everything else about it looked pretty good. It's not all my rules, but it's most of them, and that's why I'm going from a full risk to a partial risk. Okay, get in the game, Fedora. That's the way I look at it. Ladies and gents, that's about all I have. CAD Swiss, let me take one fast stab at that for you. CAD Swiss, ugly. Can you say ugly? Very, very slow, gradual, few months of lower lows and lower highs. That is about as ugly gets. I don't like that the alligator's mouth is closing on this downtrend. This is about as hideous as it gets. Yes, CAD Swiss is not even on the list also after I've refreshed it. Yeah, this is nothing but one big sideways puke fest. Pardon my language. Okay. That's nothing but a equilibrium, fair market value on a grander scale. I look for extremes. I don't like it. I got something much deeper down for possible demand, but it may be stuck sideways for another month. You never know. Sorry, that's about the best I got. I got a demand down here, got a supply clear up here at the top, looking at the swing highs and swing lows, high on the curve, low on the curve. I don't diddle in the middle, and that's exactly what we're doing if we trade anywhere in this section, guys. That's diddling in the middle. That's where retail traders get chopped to pieces and get stuck. Equilibriums act as a magnet, a price magnet. And that's exactly what's happening. They're getting black holed as we speak. Okay. So sorry. It's about the best I got. I think there's better items out there for you. But that's, obviously do what you want, but that's about all I can come up with. So ladies and gents, that's all the time I have. I'm already 2 minutes over. Sorry, James, as always. Take care, stay safe. And if we don't see anything, just sit on our hands, right? Go do a little back testing. It's just another one of those slim pickings days. So sayonara. We'll be back same time tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.